morning. The 12th of August, 2025. Welcome to my virtual trading journal. I follow a risk-neutral trading philosophy and trade management idea. This is my virtual trading journal, so it is not for financial advice or trade advice. It is a way for me to capture as much data as I can in my journal, or for a journal, without disrupting my focus on trading. I am able to see what I see on both screens, obviously, and that's captured in the video, and then my voiceover gives insight as to what I was thinking. There's no monetization involved here. I get nothing for the stream. It's strictly for my to record as my personal journal. The reason I stream it to YouTube is therefore I can review it on any device, and it strengthens the transparency and the accountability. I have a strict commitment to take no trades in these accounts outside of the stream, and that's why the stream lasts for 7 hours every day, starting now at 8 o'clock until 1500. The stream is high def 1440p, so if it's not real clear on your side, go to the gear on YouTube and you can choose the highest def that you've got. But I stream 60 FPS and 1440p. The idea here is that I share everything that I'm viewing, and hopefully it will help somebody, or you get a big kick out of it and die laughing, whatever. But I mean, that the object is I'm talking to myself here, so, and I'm sharing it with whoever wants to listen. All the times on my charts, or that I refer to, are Central Standard Time, and I don't know. The object is to develop trading as a business that is consistently profitable and sustainable. And we'll talk about that as we go along. The next order of business that is important now of the day is the numbers. This is Bookmap, okay, and this is IRT, my charting package. And this is one of my two news sources. This is investing.com. Here is the numbers calendar out for today, and the only number that we had was at 7:30, and that's the CPI, both the month over month and the core, and year over year actually. But obviously, everybody's going to make a big deal out of the month over month because they're going to say it went down 0.1%, when in reality the core CPI went up, and that's the part that matters. Anybody that's living in America knows that things are costing more. It's that's pretty simple. Unless you're in living inside the Beltway, or maybe Mar-a-Lago or someplace like that, it's everybody else is feeling the pinch. This is completely free, and there's also important to notice there's no real earnings out this week, essentially. That's going to be a real market mover. NVIDIA is coming out later in the month. This is Financial Juice, which you see where they're making a big deal out of the year over year, 2.7 versus 2.8. Okay, good. If you're in America, ask yourself if you think prices are going down, or if it's costing you more to eat and live, etc. And that's what CPI is, Consumer Price Index. So, there you go. Now, we do have a press briefing for Random Risk at 12 o'clock. We're out of the way with all the 7:30s. We got a couple of talking feds. And I believe somebody said that the Treasury Secretary is going to be given an interview on Bloomberg this morning, but it's not on the docket here. So there you go. Now let's get into the all-important pre-market. This is, as I said, IRT. These are the ESE minis, the NQE mini, and this is the micro composite for the ES mini and the market profile. I also plot in the exact same setup for the micros of each one of these, okay? But let's focus on the minis at the moment. So here is the everybody. Here is the overnight session so far, the ETH session so far, and you can see 7:30 when they took the bump up, and now they're right back down where they started, pretty much. I'm not sure why that's not doing anything. Huh. This is the NQ, same story. And the micro composite is essentially the higher time frame chart, and it's very simple. It's just anybody can do it with any charting that they have. It's the RTH session, which is 8:30 to 1600, and these are daily candlesticks. Wherever price overlaps, I draw a volume profile around them, and by so doing, that generates a micro composite VPOC and a high and a low, and the high and low volume nodes, which are these red and green lines. They push the red and green lines, or the high and low volume nodes, push automatically to Bookmap, as do the session prices up here. Now, if we jump over here to Bookmap, this is the micro composite column where I manually enter these various values, the MCVPOC, naked volume points of control, which we actually took out yesterday. So that my workflow is, what I'll do now is set the naked volume point of control for yesterday. Oh, I screwed that up. I'm sorry. I got to change this to the 10th. I always encode the dates, right? This is the 11th. This is the naked volume point of control from yesterday. This is where the market closed. This is the POC from yesterday's RTH session, where at the close yesterday, right there. Naked volume points of POCs. And this is real important right up here. The overnight high is above the all-time high from the 29th. The important bit of info here is that this was put in on the 29th of July in the RTH session, if you can see that. However, on the 31st of July, the ETH put in an all-time high way up here at 68.5. Typically, the RTH traders don't like it when the ETH session puts in any kind of a record. And I've been talking about this almost every day and wondering when we were going to get here. Well, this morning on the CPI bump, true or not, they got all excited and went up here and caught this one and put in an overnight high, one tick above it. So once again, we've taken this out in the overnight. Typically, that's not where records are set. This is the high and low volume nodes pushed from IRT. Full session volume profile, which started plotting at 1700 last night. And this is the RTH session, which will start volume profile, which will be reset this morning at 8:30. This is my notes column. It's very important to me. And the first thing I do is clear these notes from yesterday. Okay, and then the next thing I do is determine what the open type is, or what I expect it will be for the day. And that is really simple. You look at where, assuming that we open right here, right now, where does that open relate to previous RTH close? It's above the close, right? It's higher than the close. And is it within, and how does it relate to the previous RTH range? There's the RTH high and the RTH low is down below us. So if we opened right here, right now, we would be opening higher in range. So this would be changed to higher in range. There are only 4 open types, by the way. And I'll tell you why I do this. When I look back at a screen snap or the recording, and I can look right here, and that tells me a lot of information without looking around at anything else. I also then plot the, VPOC migrations and stuff in this column. These are the session prices, which are pushed automatically to Bookmap from IRT. And there's no mystery about any of these levels. First of all, there's no indicators on my charts or my Bookmap. There are only the session prices and price. There's a POC for the full session, which is kind of a muted yellow and a brighter yellow for the RTH. The POC is nothing complicated. It's simply the price at which the most contracts have traded so far in the session. That's all there is to it. And you see they're both on top of each other pretty much. And I would suspect that settlement's right around here. Yep, there we are. Okay. Then we have the mid for the RTH, the VWAP for each Globex and and RTH session, and we have the IB or the initial balance lines, and that's an old acronym from the market profile days. And all these prices, there's only 2. There's an IB high and an IB low. All they represent is the high and low of the first 1 hour of the RTH trading session. Period. They move up. The IB high moves up with price until 9:30, and the IB low moves down with price until 9:30. At 9:30, they don't move anymore, and that's when the IB statistic is in play. Okay, the next thing that we do here, based on the open type, that suggests what statistics we will associate with their prices. And we do that from this study in IRT. Yesterday, we opened lower in range. Today, I'm expecting we're going to open higher in range. Right here. The study looks back at 2,000 days. Of the 2,000 days, we opened higher in range 604 of those days. Been pretty much an uptrend, right? By about 60%. Of these days where we opened higher in range, price revisited the overnight volume point of control 83.4% of the time. Overnight volume point of control 83.4. Boom. That's all there is to it. Now, it's important. I will just now go down the list, right? The next order of business will be the overnight mid, which as it typically is, and that's 77.0. Overnight mid is right there. And that's all I do, and that's all that you need to do. Now, it's real important to understand that these are not hard, fast, guaranteed levels. If they were, it would say 100%. Right? Looking back, you got to remember that I approach, and successful traders approach trading as a business of statistics and probabilities. And in this case, the data set is a look back at 2,000 trading days. Of those 2,000 trading days, price revisited in the upcoming RTH session, it revisited price 83% of the time. So that's a good probability, but it's not hard and fast because 17 or 16.6% of the time it didn't revisit that. You understand? It's statistics, and that's what you've got to really get your head around. There's no future in predicting where the market's going or any kind of a secret, you know, this indicator is going to give you, do this once every day at 9:37 when the, you know, when it's cloudy out and the chicken's laid a double yolk egg or whatever the hell it is, that you're going to have a successful trade. That's not how the market works. It does not reward predictors or guessers or gamblers. It rewards probability traders based on the law of large numbers, i.e. probabilities. So that's how that works. And now we're going to go to 75% of the overnight high. Ooh. All right. I think you get the point. I want to show you one that's important. The IB high, 68%. So the IB high is living right there, okay? It's hidden under here, but I know where it is, and you can see it over here in the label for this green line. And that's 68%. The reason I want to show that is to show you what I do here. And later you'll see why. I put the initials, IB high, what it is, the level, okay? And why do I do that? Because the minute the RTH session opens, this flag and the IB low is going to immediately go to the new location for the high and low of the first 1 hour and continue to move up or down until that 1 hour is over with. So it's not going to be here anymore. I mean, I don't know what the probability of them both being at the exact same place is, and I don't care. So when I look back at these percentages, I'm going to say, what the hell is 68.0? And well, it's the IB high. Now, the rest of them won't do that, so I don't have to worry. Overnight high, previous value area high is 71.5. That's right under the IB. I'm not going to worry with that one. Previous close, that's a good one, and that's a 70.7%. Typically, there's kind of a sequence that they usually fall in, right? The overnight IB low is 62.3. Where is the overnight low? There we go. It's 49.8. Let's get that in down here. And the previous low, whoa, way down there, 35.3. What's this pink thing? Is that the VWAP? That's the RVWAP. So the RVWAP, the R mid, and the R IB low from yesterday are all in a stack over here. I'll put IB low down there at 60.4, just for grins. Okay. So what do we think is going to happen now? Well, I would anticipate we are rotational. We've been pretty much rotational all night. Inventory is essentially about 75-80% high, and that's just an absolute guess, because here's a close or the open, however you want to look at it. How much of the trade is below that line and how much is above it? Looks to me like probably at least 80% of the inventory is long. In that environment, I generally expect some responsive selling to take profit. This is a real crazy week. It's seasonality wise, it's one of the weaker weeks in the year for trading. There's no Fed stuff this month. They're going to Jackson Hole and a bunch of other things. We have the ever-present random risk from the administration. You don't know what they're going to say or when. And so I don't really know. That means what I'm going to do, as I do every day, is I'm going to watch the market and trade what I see, not what I think. That's really, really important. The next thing, order of business, is the TLab snap. And that is something I did yesterday and then never published, which is pretty crazy. I did this whole snap and put it in the thing and then didn't bother to click enter. How about that for crazy, huh? Okay, now we got it. So every day at 8:20, every day at around 6 o'clock, I put a snap of the opens. And Jesus, now I got it in the wrong chat. Anyway, and now I put it in the wrong snap. Wait a minute, I don't want to do that. Well, I'll tell you, I'm not doing too good today. So, Jesus, that's confusing. Let's get back to the reality here. So what I've done now is I've posted that into the Traders Lab. And what is the Traders Lab? Well, it is a Bookmap Discord chat room started by a guy named Tom B. It's completely free. You don't even have to be a subscriber to Bookmap. But you do have to join the Bookmap server, Discord server, obviously. One of the things that I find real about it is that you're never solicited for anything. Tom has nothing to sell, nor are you ever solicited. And there's a good crowd of people in there. He has similar risk management ideas to mine, and I've taken some great ideas from him. He's a professional trader that has been at this for 46 years. He doesn't trade live, nor does he post call trades. But I believe that he's the real deal. I believe he's genuinely a trader and obviously successful. You don't see any wrapped Lambos or gold chains or anything, but I think that what he does, it's pretty obvious to me that he is comfortable and successful. So I think those are good. I think those are all good attributes. And I believe that he's genuinely interested in helping people get better at trading. And like I said, there's a good crew of people in there. So if you get to join the Bookmap Discord server, and there's a link to that in the description here, navigate your way to the Traders Lab Tom B and give it a look if you feel like it. It's a Discord place, so it's different than this. He does stream a little bit once a day for about an hour and a half, I think, but it's all look back stuff pretty much. It's pretty much rearview mirror. So there's that. But yeah, anyway, the Traders Lab, there you go. So now let's get to something that's probably more important, and that is being able to trade here on Bookmap. And that is done like this. The first thing you have to do is initiate the trade control panel by clicking the padlock. Then you select a method you will use to interact with the application and trade with your mouse. If you choose chart, the only place you can trade with a mouse is this active data column right here, this little guy. Notice the mouse is a $sign, then it's an arrow. $sign, there you go. If you choose DOM, the only places you can trade are the DOM columns. If you choose both, guess what? Yep, both of them. Now, the next thing I do is I trade with multi-brackets. And I use a risk-neutral trade management system. This is the smallest bracket you can use for risk-neutral because you need to have even number of contracts in the package. So there's the size, 2 contracts. Then you select your stop size in ticks. And you can do that however you, in your homework, you determine the most optimal for your account size, your risk tolerance, the market volatility, etc. There, a lot of parameters can go into selection of this tick size. Once you've entered the tick size and you already have the number of contracts, the first risk-neutral target or risk-neutral scale, profit target 1, whatever you want to call it, is automatic because it is for half of the package and it's for the same number of ticks positive as the stop is negative. Then the balance of the package, divided up however you want it to be, are the runners. For example, if you have a four lot risk neutral package, 4, 2, and you can get 2 runners out of it. That's how that works. If the volatility is crazy, like it was back in April with, Agent Orange's tariff announcement, 24 ticks. So there you go. The beautiful part about this is the minute you achieve the risk neutral scale or profit target 1, the worst outcome the trade can possibly have is a scratch, because this one pays for the trade and this one's riding free. I know a lot of people will argue about that and, you've given it back half your profit. Yeah, it's like trading wheels on a bike. Training wheels on a bike. Once you get to be a real good bike rider and you can pick out only A+ setups and trade them, there you go. Rod does that. He has made that switch now from the risk neutral system to just, in other words, he would eliminate TP1 and he would have 2 contracts, 48 ticks, and he's making money hand over fist. But he's been at it a long time and he is confident and has done the homework statistically to know that his setups do have an edge, and we'll talk about that later. The next thing I do is click this boy right here, and this one, and this one, and that one, and back over here. And what that just did was this data and this account is a TopStep evaluation account. My thinking here was to start 0 to hero, right? To completely, transparently, and with full accountability, document the entire journey from starting through EVA or XFA and live funded. And that's what I'm doing. Now, this is all scheduled or geared up to one account and one contract, one trade size, in this case, 2 accounts. Two contracts, and then that multi-contract thing copies to 4 others. So in basically, when I take one trade here, the same outcome and any kind of movement of stops or targets is transmitted immediately and is reproduced on 4 others. So it would be a total of 5 contracts. Back to this then. What I do is after I've set the multi-brackets and everything, I make sure that this is the right contract size or package size I've selected, and I click that to off so that I get my real estate back on my screen. I have all the same important data right up here in ticks, plus I have cancel all and flatten. I personally, by using multi-brackets, I don't need to use these OCO brackets and things over here in the trade control panel. All of this data, which I care about, is up here, and it's all in ticks, not dollars. Ew, and we're open, and we restarted, and great. And I'm busy babbling along there, and here we are. Well, it restarted. That's kind of cool. And now I'm going to start flagging my migrating VPOCs, and I am going to do something else that I've started doing recently, which is put in a vertical line at the start. And that is only for my visual reference. My new idea is, and I think Rod's the one that pointed this out to me, I try to keep the entire session in the screen through the day so that I am never out of touch with context. When I reach an area that I anticipate interacting with the market or trading, then I can zoom in. And the reason for the blue line is, or the vertical line is, I don't have to look down here at the bottom and see where the start is and all of that crap. I can, if I see the blue line over here on the edge, I know that I've got the whole thing in view, and it's just quick. That's all there's to it. So we've opened. Now, where did the overnight volume point of control go? Where did the statistic for that go? Oh, jumped way up. You see here? The overnight volume point of control. While I was talking and in the pre-market, it jumped up here. Now, the next important thing to know is where was the previous RTH high, and that's right there. So let's confirm our open type is correct. Where do we open? We open right, that's the open right under there, whether you believe it or not, that pink boy. So we opened higher than the close, and we opened within range, higher in range. Believe me, none of this is, you don't need to wear a pointy hat or have a magic wand or a big long beard or anything else. This is absolutely just common sense, statistics, and math. And we'll talk about trading as a business and why I feel so strongly about all of those things after we get past the open here and on our way. And this is about as muted to open as you could possibly want to get, isn't it? Now something I'm doing, which is probably right here. I'm setting the, what the hell happened? I'm setting the charts from full session to the day session only. And it's really easy to do with IRT. That's what you do. We don't have any lags in the data so far. Here's our settlements. Volume's kind of light again today. Okay. Going to save the ETH or the minis. And this thing always does that. Jump over here to the micros and do the same thing for them. The reason I'm doing that is obsessive compulsive story to do with now what you have in front of you here is, hold on a minute, obviously. What you have in front of you now in the minis is day before RTH, yesterday RTH, and here we are at today's RTH. This is not a gap in my world, because in my world, a gap is range to range. If we'd opened up here, it would be a gap because we were above yesterday's range. So we gapped up here. We're trading up some more. But this was not a gap opening. I just wanted to make that clear. And you can see in the micro composite what we're doing over here. Market profile. There you go. It's all just common sense and data. Now this is just, crackheads. Frankly. And good morning. If, slap a thumbs up, say hi in the chat. Welcome to the stream. Every morning at 8 o'clock, it starts with, explanation, numbers, pre-market, setup for Bookmap and IRT. Then we get the open, and got to make sure this is correct too, by the way. Then we get the open, and away we go. Now, you'll notice that the line for the initial balance high is up here, and the flag is right here. That is not an error. It's completely normal behavior on the part of Bookmap. And how that works is the following. The data from IRT that drives this line indicator and my cloud note flag is the same exact data. You see how they just aligned? Bookmap only allows the minimum refresh time Bookmap allows me to set in the cloud note column is 1 minute. And whoever the folks are that coded this indicator, which you have to buy, and I found out later you don't really need, but that's another story, obviously set it to refresh faster. So it's the same data instantaneously pushed from IRT, and it's just how Bookmap updates them. So that's all you got to worry about there. You notice how when I zoom out, then these aren't necessarily exactly aligned properly. So there you go. So the IB high is the high of the session so far, and the IB low is the low of the session so far. Oh, don't you love it when a plan comes together? Look at there. And all this, remember that all this is an old market profile term for initial balance. What these two levels represent are nothing more than the high and low of the first 1 hour of this RTH trading session. Period. There's no indicators. There's no, that's basically not the truth, because in my opinion, an indicator is a calculated something, line on your chart or whatever the hell it is, right? VWAP, both Globex and RTH are calculated. It's volume weighted average price. So I guess technically I do have two indicators. And if you want to call volume profile an indicator, I guess you could do that too. But, when I say I don't have indicators, I don't have RSI, MACD, crossing over this, the IB, the simple 200 to 20, all the moving averages and all that stuff. I don't do that or have that on my charts because I feel like I want to have, and I also don't have a real cluttered up heat map here. I have liquidity. All these heat map lines or variations in color represent are changes in liquidity or resting liquidity. What's this big line? Wow, something's going on at 64.5. What is it? Oh, there's 436 contracts available for sale over here at 46.5. Interesting. That's how I do this. That's how I work it. I am currently vetting the IB trades, of which there are 2. What does that mean? Well, I'll explain a lot of it after we get through this open period here. But by definition, the IB will continue to move up and the IB low will continue to move down for the first 1 hour, right? Because it's just the high and low of the first 1 hour. So after that first 1 hour, these stop moving. They're set. And then a well-known statistic comes into play associated with these two levels. And around that are 2 trades. There is a continuation trade. In other words, price comes up through it, messes around, does whatever you want it to do to qualify your entry, and it continues on. The other one is it comes up or down either way, and it flusses around a bit, and then it can't get going anymore to the upside, so it reverts back inside. those are the two trades. I chose the IB trades because they're easy to see, easy to identify, absolutely nothing for me to do until 9:30, because the IB is not a statistic until 9:30, at which point I have two opportunities, a continuation trade or a mean reversion trade. So I can trade both types of market conditions, balanced or trending or directional. That's where I'm at. Now you know as much as I do. So there you go. There you go. Any questions or comments or anything, throw them in the chat. That would be great. I don't, as I said in the pre-market, I'm not monetized in any way. So, thumbs up, subs, or whatever would be super. That's kind of rewarding and fun and helps the channel out. Be nice to get a crowd of folks in here that think the same way. So there's some dialogue going. I have a Discord channel, but I don't, there's only a couple of us that go there. I don't think that's necessary at this time, especially because, hey, Richard, morning. Especially because the stream goes all day. It goes from 8 o'clock in the morning until 1500 in the afternoon to ensure complete transparency and accountability. I didn't want a situation where I stream for 2 hours or whatever, like most of these people do. And then in the afternoon, a trade comes along. Well, I can't take the trade because I'm not streaming. And my commitment is to take no trades off the stream or away from the stream. And so many guys that, I don't know how stupid they think people are, I'm in a loser today. Well, I'm going to close the stream down for today. And then the next morning when they open their new stream, got back on the market yesterday afternoon. I got that all back and made another $1,000. Yeah, right. Maybe that's true, but it sounds like bullshit and bus tickets to me. So, there you go. Morning, Richard. I guess the CPI guy didn't want to get fired. So the market jumped way up on that one. Right there. CPI. A big pump. And as I pointed out somewhere along the line, we went up here on fumes to this all-time high. But it's important to remember that this all-time high put in on the 29th, this is the ES mini, was done on the 29th during the RTH session. You can see the date right there. It's 290725 RTH. However, the real all-time high, if you want to be technical about it, is right up here on the 30th, put in during the ETH session. And I've been saying for, a lot of last week and so far yesterday in this week that I fully expect in the very near future that this one will be taken out and this one will be taken out, because typically the RTH traders and session people don't allow a record or an all-time high to exist or to stand or to remain, however you want to call it, that was put in by the ETH traders or the, overnight session. So far today, we've already taken out this one. Now I would expect that within the next, who knows? Could be, 2 years from now, but I would expect relatively soon we'll go after this one. And this gives me a good opportunity to show you my workflow, which is the following. These levels, I remember, are put in here manually. And when a level like this one has been taken out, and it has not been taken out. Has it? Yeah, just barely been taken out or exceeded in the RTH session by one tick here, because there's our RTH high and there's the level. What I do is I leave it on the screen so I can, as a reference, but I change the text to black. In the case of in the case of in the case of a naked volume point of control, the text would be white. That would be black. that tells me that's where that level was, and everything about it remains the same, but it has been revisited by price. There you go. And they got right up here below the overnight high, the developing value area high, the POC for the RTH. Pick a level, huh? And remember that so far, granted we're only 15 minutes in, we've only got a range of 19 to, is that right? Holy crap, that's a pretty good size range. Damn near 20 handles. Wow. Now that's where I need to widen this out so that I get my scale here, something that is meaningful to me. I was thinking we hadn't traveled very far, and that was wrong. So that was a misconception on my part, or a misunderstanding. I try to keep these at $1 high and then keep the whole range in view over here, but with these wide swings, that's tough to do. One of the things with Bookmap that's hard for me to do is maintain an understanding or the correct perception of scale in the movements. With IRT, and that's what you're seeing with IRT, it's a lot easier to do. So here is the what I was talking about. There's the IB high. There's an iceberg's been sitting there forever. We took out 1,050 contracts up here. That's a lot. Here's that RTH, which I changed the text to black just simply by going to style and doing that. Boom. Boom. Sorry that I had the wrong window up. I'm not as you might have figured out, I'm not a professional influencer and guru guy or whatever. And here is that all-time high that was put in the ETH right there. About 68.5, I guess it is. Could check that over on the on the micro composite. So what I was talking about was the fact that I was all screwed up. Now here I've got $1 high, so that's pretty good for me. Because all this extravagant, this wild swings have now scrolled off the screen. That's how Bookmap works. If I get like this, then it'll all go south over here because it's trying to incorporate all the data that's coming in to this view. So this is the way I like to have it. The range in view and $1 high. And then I can decide how I want to deal with all of this. And like I said, in the pre-market somewhere, I hope, when I anticipate that I want to engage with the market and trade, I can zoom in. And that's what I'm doing. Well, I guess they figured out that the core CPI was a miss, huh? Jesus Christ. Remember, this is our close down here. And I got to get that. I got my levels off. There we go. Got to get this gun resighted, I guess. Okay. And I want to reiterate early on in the process, in case you didn't hear it first, Richard, you can zone out because you've heard this a million times. I'm currently in the process of vetting the IB trades. I have nothing to do except monitor and narrate the market and, analyze what we're doing for the first 1 hour because the IB statistic only sets at 9:30 when the IB low and the IB high cease to move up or down because, by definition, they are the high and low of the first 1 hour of the RTH trading session. Nothing mysterious. It's just that's how it works. And if you approach the market as a business of statistics and probabilities, which is how I believe is required to, rather than gambling or video gaming or any of those things, assuming that you're interested in a sustainable, consistently profitable business. If you're into an adrenaline rush and like going to Vegas and gambling, knock yourself out, just click hell out of things like you're going to kill snakes with that mouse. But that's not what I'm up to. So that's not the thrust of the stream. And that's why I don't, a bunch of trades every day and a lot of hot action, which is probably more appealing to a lot of people. But that's not what I'm about here. And I'm trying to be as articulate about it as possible because A, that's how I get insight as to what I was thinking when I review the stream. And B, maybe it'll help somebody who my thinking about the market, and it's not just me personally, it's a thinking that resonated with me and that I've adopted from the best, most successful traders in the world. And that's not a bullshit, that's the truth. Jim Simmons and Ray Dalio and Paul Tudor Jones and Tom Sosnoff and Tom the Trader, the best loser wins guy, all the way down the ladder to Tom at TLab and Rod and Garrett and us in Static or wherever, or Richard here and Jesus Christopher Christ. So he's now the person that decides allowing a lawsuit? I thought that was a Justice Department thing. Man, this guy is getting way out there like Pluto, boy. And one day Powell is doing everything fine, and they're going to have a new replacement nominee by the first of the year, and then the next day he's going to fire him. It's just incredible. I think what it is, as I've said a lot of times before, Agent Orange, which is Richard came up with, and I think that's a great nickname for Trump. I was calling him Mr. Microphone or, trying to be polite, referring to that whole dynamic as random risk. Or the Great Pumpkin, that's another one. But anyway, I think his whole thing, if you stop and think about the history of his life and everything that he's done, this is reality TV on steroids, man. And whenever something comes up, then they're like, for example, I bet there's some news about Epstein again. Therefore, this big story, he's going to try to throw the market off, and all the fast, the short news cycle is going to be all thrown off with this big story that he's going to sue Powell for what? For doing his job? I mean, Jesus, Christopher Christ. That's just what I believe it is strictly reality TV, cheap theatrics, and misdirection. That's what I think it's about, because there's no sense. How can there be any sense to that? 2 days ago, or was it yesterday? I have no consideration to fire. First, you can't legally fire Fed Chair Powell. And sue him for what? It's just crazy. I think crazy. I mean, if I'm wrong and there's something else there, then drop something in the chat and clue us all in. Let's see what I see on my. Oh, now he wants to sue Powell over construction of the Fed buildings. Wow, what a screaming. Crazy guy. I really believe it's misdirection. That's what I believe. No, you want to do that? Yeah, boy. Well, that's pretty interesting. You seeing this over here, Richard? China orders companies to halt NVIDIA chip orders. That was 8:02 this morning. Somebody posted that in Static here. I don't know where from. I don't see it in my stuff, but maybe. Pretty crazy. Pretty crazy times at Ridgemont High, huh? Wow. Well, they're moving that range out. Now we're down to 30 handles wide on the so far. And we're just rounding the curve on the 9 o'clock here pretty soon. First 30 minutes. Now, let's talk about, this is a good opportunity maybe, to talk about the IB statistics and a variation on that. And that is, hold on, I want to see one more thing here while I can't type and talk. Oh, there it is. Yeah, here's the China orders. I don't see that in Static, but maybe it is. Maybe somebody posted it over here. I don't know. Damn, I wish I'd stopped doing that. All right, that's enough of that. I'm going to stop posting over there. Okay. Well, what was I getting ready to say? Yeah, all right. Let's get back over here to what I was doing. See why I use the stream? I can't type and talk. Yeah, and Richard, that ballroom is $200 million. $200 million proposed cost. And I forget what that military parade of one day cost. But it was up there in that range somewhere. But we're firing people and things to cut costs. It's truly pretty hard for me to understand. So what I was getting ready to say was we have now crossed over back to trading. We've now crossed over the 9 o'clock hour, which is the first 30 minutes of trade. I have, described ad nauseum here this morning and every day that the IB statistic is only active after 9:30 because that's when the IB is set. And what is the IB statistic? Well, it's a very old, well-known statistic from the market profile days that says in all four open types, there is a greater than 97.5%. It varies a little bit, tenths of a percent, each open type in each day. That price will take out the IB high or the IB low in the remainder of the RTH trading session, again, after 9:30, because the statistic isn't active until 9:30. I'll say that again. There's an over 97% probability in all four open types that price will take out or exceed the high or low of the IB statistic in the balance of the RTH trading day, that RTH session. So that's the statistic, and there's a couple other ways you can look at that, which we'll talk about in a minute. But the reason I was going here now, Rod in Static and TLab sometimes, he is a great coder, develops the Static app and those kind of things. He determined statistically that there is about a 90% probability that the high or low of the first 30 minutes, which is where we are right now, is exceeded by price in the second 30 minutes. And guess what? Right there, that happened already while I was talking. Okay? At this point, right here, the low or the IB low was up here. Now that let me just make sure about that. I want to make sure I'm not misleading myself or you or anybody else. Okay, yeah, 7:30 is right here. So here's the low. Whoop, come on. Here's the low of the first 30 minutes. All right, because it's all ahead of 9 o'clock. This low is at 9 and 21 seconds. Doesn't say, so technically this price in the second 30 minutes has exceeded price, the low or the high, the IB high or low in the first 30 minutes. Now they refer to that, and we refer to that as the IB 30, as opposed to the original statistic, which is referred to by me and sometimes here is the typical IB or the IB 60. One of the things that I'm starting to think I like about the IB 30 is that it gives you a time parameter of 30 minutes because the statistic is based on the fact between 9 and 9:30. Very, very specifically says that price in the second 30 minutes exceeds price in the first 30 minutes in terms of high or low. So that narrows your parameters down to that second 30-minute period, which is, in my opinion, kind of nicer than the original statistic, because that states that at some point in the balance of the RTH trading session. So you've got 6 hours for that to play out, if you see what I mean. Okay, there you go. And now this would be, if you were trading this, you could be trading a mean reversion here, which has been the trade so far today. We've, outside in. Now, I don't think you can take these trades because this is the POC. So where's in? In is the POC. That's the mean. Mean reversion means outside in. Outside in. This is, there's no in here. It's all over with. Down here, yeah. Mean reversion. Boop, back to here, and they almost got it to the tick. So there you go. I'm not sure if I had that muted a minute ago because I was eating one of my wife's fresh baked hot croissants, and I didn't want to be chewing in your ears. But if the music is too loud or soft or whatever, somebody drop something in the chat so I know about it. I don't have speakers in here. I don't like standing here with a headset on all day. I like it quiet, so. But I realize dead air is no fun. Well, where are we doing now? What are we doing? Who's on third? I don't know. Okay, here we go with my concept of keeping the Session in view. So we're $1 high on price in the session, complete sessions in view. We've got everybody in a pile. Mid, VWAP, POC, both POCs, both the full session and the RTH session. Yeah, you know, the full session is a darker yellow, if you can see that. Also, if you weren't around for the pre-market, this is streamed. I stream in 1440p high def, so if you're not getting good, clear, crisp video, hit the star on your YouTube thing and grab the highest one that's offered to you there. It's 1440p and 60 FPS. We will take a run around the roses here. This is the ES. These are the minis. These are the micros. Same setup. Minis. All right. Here is yesterday's RTH session. Here's today's. I don't know what's going on here. There we are. Thing didn't want to do anything a minute ago. This is the NQ. And this is the micro composite ES and the market profile, excuse me, ES charts. These are the session prices, and these are the high and low volume nodes, these red and green lines, which are pushed automatically to Bookmap. And they appear here. These are the high and low volume nodes column up here, and the session prices are here. If the session prices would be helpful and you have Bookmap or another, you know, Excel or something you want to, I supply these freely to anybody that wants them in any of these other sites that I used to be in, like TLab and whatnot. So just drop something in the chat and I'm happy to make a plan to share a link with you. Internally, of course, it's all within this one trading machine, but what I also push these, and this is real time from Sunday night at 1700 through Friday night at 1600, continuously in real time. I push it's from Google Drive, a link that I share, and then all you have to do is slap that link into the Cloud Notes column if you're using Bookmap, or the line, price line column if you're using Bookmap. And I think Sierra Charts and others have a similar functionality. Happy to do that. Okay. With the absence of real market data, we did have that big pop on this right here on the CPI at 7:30. But now there's really nothing else. We got a couple of talking feds and a little Agent Orange. Boy, I like that one. That is so funny to me, Richard, I think. I appreciate that a lot. I don't know I don't know how to refer to that guy. There's a few people in the administration now that are obviously very fond of the sound of their own voice and are very definitely not camera shy. I don't remember those conditions previously, but yes, maybe they were. I don't know. But I refer to that whole group as random risk because, in my opinion, it is the random unknown risk that we have to deal with in trading now. Markets, numbers, those kinds of things we typically have scheduled, and we have some anticipation about them. They've been, released on a regular schedule for, 50 or 60 years, until recently when we started firing the guy that put out a number we don't like, which is, I think, a real dangerous precedent to set and destroys the credibility of what we do financially. And let's be honest, if we think that we're going to compete and swamp people in low-tech manual manufacturing of, screwing iPhones together, that we think that's a good use of the population, and then I don't agree with that theory. I agree, we are at a society that produces technology and financial leadership, or we did. That's what we contribute to the world. Now, I don't think even the mega people would be very happy if all of a sudden somebody says, okay, now you're going to go work for Apple and you're going to sit there and screw phones together 12 hours a day, 6 days a week, and we're going to pay you $500 an hour a day. A month. I wonder what they'll say, because that's the reality of it. But nobody seems to recognize that, so I think that's scary. But anyway, the reason I call that whole dynamic of the administration stuff random risk is we don't know what impact or when, we don't know what or when will be said. So and it definitely has a market moving potential. So in any kind of project management or in anything, common sense wise, you try to identify a risk and then make a mitigation plan for it. Whether it's, if you have an identified risk like a CPI number, you make damn sure you're out of the market and flat, right? That is the mitigation for any kind of a big number, non-farm payroll or whatever else it is. But when you have no idea when that risk may come into play, then that's an extremely high implied risk. And I don't know how to deal with it. So you just have to have, the way I'm approaching it is, be very methodical about what I'm trading, right? Vetting these trades. Only trading that setup for now, until I have the data set properly collected to vet the trade for an edge, and then and always only use the bracket orders, the risk neutral bracket order. And I realize fully that even though there's a stop in the market, that the minute price gets to your stop loss, it turns to a market order, and you're then filled at the best price of that can happen at that time. And you can get slippage, but that beats the hell out of something going on. You don't have any order in the market at all. So that's no risk management, or risk management, I guess the best way to put it. So that's what I'm doing. And we're fast approaching 9:20. So back to the IB statistics and the IB trades that I'm vetting. The IB failure is a risk neutral trade, or a mean reversion trade, right? And it would best be suggested or anticipated in a balanced market, right? Because that's what the market is doing. In a balanced market is mean reverting. In a directional market, then, one would imagine or anticipate an IB continuation trade. So I have both of those on my mind as we approach this. I'm looking at this now and thinking, well, that looks kind of directional, until I look over here and I see yeah, but it's been pretty much rotational. It was lower highs and lower lows until it's not. And now it's higher lows and higher highs. So it's kind of rotational. The volume profile on Bookmap is maybe a little misrepresentative, or gives me the skew that it's more directional. If you look over here at the volume profile chart, That's looking pretty balanced, eh? So far. So that's something that I've been dealing with the last couple of weeks, is anticipating rotational, for example, for mean reversion, say an IB failure, and then turns out the best trade of the day was the IB continuation, or vice versa. So that's something I'm part of this vetting process. And the whole concept about vetting circles back to approaching trading as a statistical business of probabilities, and a business, not a video game or gambling or anything like that. And this is my opinion, right? But it is an opinion that I've fortunately, or pleasingly to me, have realized is the shared philosophy of the best traders in the world. So that makes me feel a little better. What it boils down to is that trading is a business of statistics and probabilities. The outcome of the very next trade is 50-50, and that is guaranteed. That's absolutely a statistical fact. And so what do you, and also that famous saying that nobody pays attention to, that past performance is not indicative of future results, is actually a very, very true and important statement from statistics. I don't care how many instances or occurrences you've had in the past, they have no effect on the future, statistically. So what you do to vet a trade is you first identify the setup. In my case, it's the IBs. And then you identify as best you can, as specifically as you can, the criteria that validates an entry for each one of those. In my case, the continuation or the failure. Or if you're doing just a mean reversion, it would just be one. And then you, once that's been established, you capture as many samples of that as you can to achieve a statistically significant sample set. Minimum of 50. Most people say 100 or 200 instances to get because you want the sample set to be out of random probability, just random occurrence. You know, flip a coin. Flip it 10 times, you might get 6 heads, 4 tails, or whatever. Flip it 1,000 times and you're going to get pretty close to 50-50, because everybody knows that a normal fair coin is 50-50, right? Two sides. It's binary, just like the market. It's binary. It can go up or down. That's it. We put horizontal movement on it with time, but it is a binary market. So anyhow, once you've established that criteria, then you capture as many samples of that as you can, preferably in your homework study or your back testing or whatever, away from the live market. And then mathematically and statistically, you determine if that setup and those criteria have an edge or probable expectancy, whatever word you want to use. If so, you take that every time it presents itself in the live market. And you rely on the law of large numbers to manifest the edge to your account. Now, this is the same of, like I said, Jim Simmons and Paul Tudor Jones and Dalio and everybody from the top to the bottom all think that way. If you listen to any of those successful traders, they'll get around to talking about statistics, probabilities, or, outcomes or something like that. All of them. And it's mathematical. Jim Thorpe, it's mathematical too. And it's it's where the Kelly criterion comes from, which is something that you need to get into next, but we'll not go there right now. And then after you've done that and you have that setup and that trade in your playbook, then you can start with the next one. That's how I believe you approach trading as a statistical, consistently successful business. And you need to look at it over a law of large probabilities, a law of large numbers. You can easily have, due to random distribution, you can have a pile of losses in a row. They refer to that as a drawdown. But if the numbers are still working out in the favor of statistically in favor of the setup and expected probabilities, then you don't make any changes. That can be hard to do. And that's also the business model of the insurance business. And more importantly, probably more common to most people, is casino. You want to be the casino. They play no game for which they've not pre-identified specific rules and an edge. On the casino floor, their only mission in life is to play that game as many times as they can, relying on the law of large numbers to manifest that edge. If it's $10 a hand and they play 100 hands, it's $1,000. If they play 1,000, 10,000 hands, guess what? It turns into real money, and then you build, the Palazzo or whatever it's called, or that Sphere thing or whatever else. I haven't been to Las Vegas in 45 years or something, but you know what I mean. And that's how they make money. And they fully expect that they will have losers, maybe even a string of them in random distribution. They don't change the rules. They don't shoot the dealer. They don't, throw their toys out of the cot. None of that stuff. They just deal the next hand. And that's the same way that we need to approach trading. It needs to be, so many traders hang their whole hope on the next trade. Their whole career, their life, their function is all on the next trade. And it's got to be on the series or sequence of trades over a long distribution that you determine whether that setup is statistically has an edge or not. And here we approach 9:30. We approach the IB high. Above us is the overnight high, 75% probability. There's the previous ETH all-time high. And then we have the up above us, those highs. I'm a little apprehensive as to what I'm expecting today, because I do, maybe it's not a good thing, but I do realize this is seasonality-wise, this is like a real mushy week. We don't have any serious numbers. I mean, in terms of the Fed and stuff. And we have, Agent Orange and co. afoot. They've done some dramatic things. I'm shocked. They've taken over Washington, D.C. with the Army, for Christ's sake. That's really? Or at least that's the news. I have no idea. But that, I'm not there, so I don't know. And with this short news cycle and this random internet news crap, Trump's the one that coined the phrase fake news, I think. And pretty much everything that comes out of that side of the aisle's mouth is fake news. And it's pretty ironic that anything that disagrees with whatever is they're pushing is fake. I've never heard them once say the other way. Never once. So I don't know what to think about it. And all I do now is try to stay politically neutral, not pay much attention to it. I don't have anything to do with social media stuff. I look at the two news sites, which I talk about here, and that's investing.com and Financial Juice. And I just try to focus on the market and and as I just got through explaining a few minutes ago, super heightened awareness of the potential for random risk. Don't know what else to say. Good luck, and here we go. So now I can zoom in a little bit, because one of the nice things about trading a vetted trade also is nothing is a surprise. You know, I know that I will not have a trade possibility until 9:30. And so I can start zooming in, and I don't have a statistic or a trade probability until one of the two IB levels are taken out. Now it's 9:30. We've gone 9:30 past. The IB high will not move up anymore, nor will the IB low move down anymore. The statistic is now active. And if you're curious about that and think I'm just blowing hot air here, here we go. 97.7%, 98% in today's open type, 98.3% lower in range, 97.9% lower out of range. IB high or low are revisited by price in all four open types. Higher than 97.7% of the time. Today, in today's open type, higher than 98% of the time. The IB high and the IB low is 32.1% of the time. That would be a neutral day where we take out both. We did that yesterday. Here's one for you. If we don't take out either, what is that probability? 2%. 2% of the days, looking back over 2,000 days, did we take out neither the IB high nor the IB low. So you can let your imagination run wild on the ways you can approach those statistics to trade. And now I'm going to be standing here wondering what to do next. Confirm that my price bracket is correct. Both set up. I've done all the stuff over here I need to do. Yeah, okay. I'm ready. Not hurry, scurry, and blurry. Plenty of time to anticipate and prepare. And I may not take a trade. I don't like the action in this today or this week. And we'll see what happens. And as I said, I certainly don't want to... the idea is not to force a trade. Force something. If you had to look at the Renko, you would sort of think, well, it looks to me like we're just rotating back and forth. Sort of a chop day on steroids, you know, retail soup on steroids. And a mean reversion or range trading isn't the setup and stuff that I'm working on now. So there you go. I think that's about all I can say at this point. And as in this kind of an environment or any kind of a trading environment, you have to realize that the most important goal or job of any trader is risk and account management, account preservation, which is the first cornerstone of that is risk management. That's really, I don't know how to make it, to stress it more importantly. You can have a 99.9% probability, but if you blow up yesterday, so what? You can't trade today, right? you know. And one of the, something to be really leery of is this win rate crap. Win rate is internet guru clickbait, and it is meaningless. What you need to have is your expectancy, which is wins minus, wins divided by wins minus number of wins, or how total trades, losses, total trades divided by losses, and that gives you your expectancy. Out of so many trades, out of 1,000 trades, what is your expectancy to achieve T1? What is your expectancy to achieve T2? Mathematically proven, pre-calculated, pre-captured expectancy. Not Bush Barbie telling you that her opening range trade is 1,000 times better than somebody else's or whatever. You know what I mean? They just pander to greed and emotions. That's what you got. In my opinion, this is my stream and I'm talking to myself. You got to be careful about all those things. And the emotional part of it, that everybody makes such a big psychological part of trading. Your monkey mind is developed over thousands of years of evolution. You're not gonna to think that you're gonna change your not have FOMO anymore, or not have fear anymore, or not have revenge anymore is bullshit bus tickets. You're gonna have it for as long as you're alive. What you need to do for trading is to have a vetted statistical process as specific as you can get it, so that if you want to go sit in the chair and put the list on the screen and your daughter or your kid or somebody else trade it, they should be able to do that. I'm not there yet, because I've discovered in my trading, even with the IB stuff, I can't specifically identify the final context and trigger, so I rely on a discretionary entry at that point, and that's not good. Be the first to say that. But back to the emotional stuff, you're never going to get rid of that. So what you need to do is you need to recognize when those things start to happen, and whatever you personally need to do to not react to them. If it's push the mouse down, put the mouse away, or just go, oh yeah, FOMO, go play outside, hide, whatever you want to do. Tom refers to it as Jekyll and Hyde. You know what I mean? That's what you have to do, so that you don't just start clicking the mouse like you're killing snakes, and then have all this regret for over trading or revenge trading. That's just compounding negative reinforcement. And don't tell yourself you're an overtrader. Don't tell yourself you can't control your emotions, because your subconscious mind believes what you tell it. You keep telling it that, and it's going to go, okay, boy, we can't control emotions. Here we go. This is all what I believe. So there you go. And if I had a statistical, if and when I have the absolute statistics for this IB setup, I'll gratefully share them, because I don't believe that such a small group, can influence the market. The market is huge, huge. And speaking of huge, look at what we got here. We got 465 at 35. We got 549 at 42. 305 at 45. That's a lot of liquidity laying up there, eh? That's a lot of liquidity laying up there. I'm going to try to take a snap of this right here and throw this over to my friends in Static. Yeah, there we go. All right, get ready to trade. I'm gonna walk out and get some more tea here. Get your mouse ready there, Richard. All right, so this is kind of interesting over here. The top of our ETH high is right on the expected move, which is the thing I'm messing around with, that based on options at the money strike, which I know very little about, but this is a thing I picked up from somewhere, and I'm been playing with it just to see how it pans out. But this is kind of interesting. The expected move for today is right here. Here we are. And now I'm going to say exactly what worries me about. Two things that would worry me about taking an IB continuation here. An IB failure here, sorry, is that that all-time high, which I've mentioned about 1,000 times, and the ETH high is just above us, above the IB, and we are looking pretty rotational right here, kind of. I mean, we have 1, 2, 3 distributions. I don't know how to interpret that, really. Now, I will also, while we're on the subject, while I'm talking, none of this stuff that I say is my way or the highway. Any way that you come up with to trade that's successful is the absolute right thing for you to do. I think that there are some things that can help whatever you do. For example, vetting a trade, vetting a setup, whatever setup you use, vetting that, like I just described. Risk management, I don't think I could more emphasize the importance of risk reward and risk management. And risk reward is can be hugely important, and that's why my bracket is set up like it is. You don't use the risk neutral bracket if you don't want to. Do whatever it is you want to do, but it's about 3-to-1, right? And you need to have some sort of a compounding function in your trading so that your wins more than make up for your losses, because you will take losses. It's just a matter of fact. But if you're trading 1-to-1, or even some cases I've heard of which just I can't believe are less than 1-to-1, how are you ever going to make it? How is it ever going to be a successful business? Now, win rate can be, and that's also something where win rate and or the Kelly criterion can come into play. If your risk reward is, for example, if your risk reward is 4-to-1, so that every time you have a win, it's 4 times greater than a loss. Then, if you take 3 losses in a row and 1 winner, you're still ahead. Rather than, that's 4 steps forward and 1 step back, rather than 4 steps back and 1 step ahead, or 1 step back and 1 step ahead. You know what I mean? That's the way I have to look at it in my mind. And there's a lot more articulate people out there than me, but that's really important to get that in the forefront of your mind. I think so. So here we have 12 ticks, 48 ticks. So when you take both stops, when you take both targets here, you've got 60 ticks. You've won or made or earned 60 ticks. When you take a full stop, you've lost 24 ticks. Big difference. And you can figure these out like I said, however you come up with your stop loss and your this and that, but always make sure that you've got your risk reward, the amount of money you risk compared to the amount of money you reward is asymmetrical. You have a low risk or a much higher reward. Really, really a big deal. And that's also, these win rate guys never talk about that. Oh, I got a 90% win rate. The internet guru, rearview mirror people, that's one of their things all you see is win rate on, or at least that's all I see on YouTube is win rate this, win rate that. You ever see anybody put down their risk reward? Or, profitability or profit factor or any of those kinds of expectancy, any of those terms that are really the number you want to be looking for. And here we are inching our way up to this IB high. So I'm focusing on this. $9.45. Let's see, is anything happening that I'm not aware of? Well, this is financial juice. What do we got? We got the White House little gal going to be giving a press briefing. There's been a lot of Trump stuff or Agent Orange comments along through here. This worked out really well for him. I don't know why he keeps testing the water with Powell. Every time he tries to do anything with the Fed, it's just market dumps. What I think happens a lot of times for those guys with the random risk squad is that they just run stuff up the flagpole to see what the reaction is going to be. You know, just like all that tough rhetoric last week and yesterday, they postponed the tariffs on China for another 90 days. I'll refresh your memory that that's 180 days. So, this is Financial Juice right there, and it's free. And this is my investing.com, and this happens to be the earnings tab. And there's the reports tab, and this is also free. I look at Financial Juice through the day to kind of see this sort of stuff. I don't, like I said, I don't do social media or any of those kind of things. So for me, it's not really valid to, I don't mean valid. I was looking at something else. Sorry. Lost my train of thought. It's not really up to the minute, but at least I want to be sure that there's not something coming down the pike that I'm sort of aware of. And now we get back over here, and here's our pop through the IB. We're going to take out the IB high, or the overnight high, which is very, very expected and to the tune of 75% probability. Isn't that cute? 63 or 83%, 68%. On up we go. Every statistic that we laid out in the pre-market before, you know, just after 8 o'clock this morning has been hit, I think. One comment here about these volume dots. They are delta. They can be 3D, and this can be real fancy looking, but I like it to be simple like this, and these dots are delta. So in other words, there was buying and selling going on right here, but the buyers prevailed. And something that's really important to understand about futures, and specific to futures, it is a zero-sum game. There are never more buyers than sellers. It is a contract, not a share. It's a contract between a buyer and a seller. So there can never be, if somebody said, oh, the price went down, there's more sellers than buyers, just, you know, laugh at them and then walk away or switch off their site, because it's just complete BS. It shows that they don't know anything about the market, really. How does the market go down? Aggressive sellers. The market goes down by sellers crossing over the inside bid and crossing over the inside market and hitting the bid. And down goes the market. How does it go up? Buyers cross over the market and hit passive offers. And that's how the market goes up. There is never, it is a physical, contractual, virtual impossibility for there ever to be more buyers than sellers in the futures market. Now, if I'm wrong about that, somebody slap it in the chat room or something and show me how that works. But by definition, that's it. So, right now, there were buyers and sellers. The buyers were more aggressive. They didn't get anywhere. When the buyers don't get anywhere for their money, what happens? Price goes down. So now we've taken out the IB high, we've traded up, and we've come back down here to it. This is one of the criteria that I would have for a trade. And I missed that sell right there because that would have taken me down to the scale. Should have been trading, not talking, I guess. This is not really as good a signal as I'd like to see there, but I do believe, and so far now, had I traded at 39.5, 36.5, There's our previous consolidation right here. That would be scaled. And I still have room to go to the mean and point south. Not the full package, mind you, but that's something that I'm trying to figure out about with these mean reversion trades, or this, IB failure. Do I make it a criteria that I'm not going to enter the trade if from my entry to the mean, which is the POC, doesn't fall outside of my, or let me put it this way, my total trade profit is within that distance? I don't know what to say about that. I haven't figured that out. And that's something that needs to be worked out statistically. What percentage of the time when there was not the profit target did I get T1 and then T2? What percentage of the time, if the profit target is within these distance, did I get T1 and T2? Statistics, right? And I guess I just didn't get on it fast enough right here. A wuss, I guess. Asymmetrical trade. Talked about that. Zero-sum game. How to vet a trade. Trading as a business. So now we sit and watch. May have missed the opportunity right there. Not that upset about it in this market this week. But would be nice to have gotten that scale. Now I've got the helmet on and I'm wondering where they're going to go next. See where you're, look at where this trade short would have taken you. That's an awful lot of consolidation right there, isn't it? This big distribution. You got to get through that to get to your profit target. Statistically, I don't think that's probably very high. And now here we are going back up to the IB, and I want to stress with the risk neutral package, your main objective, well, I guess your second objective after risk management, is to achieve the scale, the risk neutral scale, which is a form of risk management. And then the minute you've done that, which is right here, it's helmet off, feet up, already high ho silver. Where you go, right? Oh, looky there, boy, huh? I am not at all disappointed that I'm not involved in this trade either direction. My gut feeling, just strictly gut feeling, is that we're going to go up. And I've already said why, because of that all-time high that's living right up 68 right there, put in by the ETH. You know, and that's not really a good reason to think so, but if I had to flip a coin, that's what I'd say. Or throw a dart or do something like that. And it's not anything that I would hang a trade on, of course, because it's not statistically verified. And right now, you'd be anticipating stop. Was this the right signal for an IB continuation? Once again, if you got long right here and took that IB continuation trade up here to this big level, you're scaled. So that's really a good step in the right direction, I believe, in terms of risk management. And if you're just cruising through the room and you like it here, or the stream, throw a thumbs up and throw something in the chat room so Richard and I know you're not just some sort of an internet ghost. Yeah. Let me see if I can. Oh God, is she talking now? No. Oh wait. 10 o'clock? I thought she was supposed to be at 12. Looks like the press conference is now. Wait a minute. White House press briefing is at 12 o'clock according to Financial News, but I just opened up YouTube and there's some right side broadcasting, which you can bet those guys all have red ball caps on. But it says she's press briefing live now. I'd beat the hell out of me. What's going on? But there you go. I wanted to find something that I listened to last night. And I'm not sure how to do this. Copy link address. Okay, Richard and anyone else, I always try to listen to something about trading to expand my, rather than just some nonsense. Whether it's I would heartily recommend Patrick Boyle on finance. He's got a great sense of humor and real in-depth and intelligent pieces every time, videos or whatever you call them, segments or something. All different kinds of stuff, but all about finance. He was a trader with Victor Niederhoff, and back in I think into the 90s when he started his career, had his own hedge fund. Anyway, Peter Boyle on finance, I recommend. And this one, I'm going to hopefully get this in the chat. I've copied the link of this thing I found last night, or listened to last night. Really, really good sound advice on the philosophy or the psychology of profit. And it is all about probabilities, which you've probably heard me drone on about enough here, but hopefully this works. Oh shit. I can't put it in over there. Ow, it's in the wrong thing. I thought I could. I can't post. Oh, wait. Maybe that's what I did wrong. Hold on. Copy the link. Paste the link. Oh, there we go. Wrong keyboard. I got 3 keyboards and a couple of mice in here, and I get kind of confused. All right, so there you go. That's not from. How the hell did that work? Well, I just pasted something in the stream with my other computer that I don't see in the chat in OBS. Boy, I am a donut when it comes to this stuff. I apologize, everyone. I'll get better, I promise. Spend money. Okay, let's start over. Let's go over here to this one. This computer. And do YouTube and do... Problem is I try to keep my trading computer completely clean. And it doesn't have any of the YouTube history or anything on it that is on my other stuff, so that's pretty weird. I posted that, and now it shows that it's posted in the site, in the chat site, but I don't see it in my OBS chat window. I don't know. Richard, do you see a link to a YouTube video from me at 10:06 if you're around, or anybody? Oh, that's pretty weird. Oh, the mysteries of all of this stuff. Huh? Just a brief understanding about what I'm talking about. I have in front of me is a 4-rack monitor, 2 upper, 2 lower. The lower 2 larger monitors are my trading screens. The 2 top ones are 27 high defs, and they are run with off another computer. Then to my left, I have 2 stand-up desks and an L to start with. To my left is a vertical 27 high def, which I have OBS and stuff. And a little further around the corner is another one of the big ones on another machine before I do email and all those kind of things. And so sometimes I get the wrong mouse and the wrong keyboard, and you know. And this is pretty puzzling to me right now. This is pretty puzzling to me right now. So we're at 40 and 45. Well, we got up to 48. So we did get we got a little bit of traction, but not to our second target. We need 12 points from our entry to get T2. That's pretty weird. Yeah, I don't see it either. And I see your answer here on both my monitoring thing and on my OBS. That is really weird. Well, I'll try to figure out how to get it to you. It's a really good piece. And I have no idea who the guy is or anything else. Well spoken, well written and well documented, and some of the stats that he was spitting out there I do know. So I think it's valid. But it was interesting. Pretty strange, and it's right between and he's building a ballroom, and then this answer, and there it is, big as life from me it's in the chat for the stream. I got. Well, maybe I should have been worried about trading instead of about the YouTube thing, because it looks like we're going to chug higher towards those big liquidities. Here we approach that 508. That's 64.5. These big liquidity levels, and I'll be the first to say I'm not sure which way to interpret them, can either be a lid on the pot or a magnet. Today seems like they're magnets. We've been just marching from one to the other. Now this IB continuation would have been, a reasonable entry so far. The beauty of the rearview mirror, isn't it? The stock and trade of the internet gurus. Yeah. And of course, if you're an internet guru, you knew very well that they were going to bounce off this level down here, mean revert, and keep going to the top. So remember that I am vetting the only trades I'm looking at or anticipating engaging with the market are at this moment are the IBs. And at this point, there's no IB because it's only 9 o'clock. Well, it's 9:27, which means that the IB 30 was taken out by a tick. So I posted this snap at 9:39, showing Rod and those guys these liquidity levels, and here we are at the 500. It's now moved up from 42 to 50, which is pretty normal, but that's anticipating where we're going. These gold lines on IRT, these levels are the balance. So this is the balance. If we hit this would be in complete balance at this point, volume-wise. I think. And now if you want to circle back to the fact that it is a zero-sum game, it's also interesting to remember that for every buyer, we've already talked about it, for every buyer there's a seller. So all these people that are buying, somebody's on the other side of that trade selling to them. Or, you know, they were short or they were long, and you know they're selling to them. So how is the other side of that trade going to make money? They're going to take the market down. The market goes up to go down and goes down to go up. That's fact. Jack. And again, these are all fractal or time frame related. The market has gone up about 8% since the 50s. You know, if you want to zoom out to a year basis, if you want to zoom into a 2-minute basis, the market's gone nothing but down. But you see my point. For every seller, maybe over here is better, you know, every one of these guys that sold, somebody was buying. And how do they make money? They take it back up higher. You know? If you bought the market right here, how are you going to make money on it? You're going to take the market up here and sell it to somebody. Sell. Because the other side of the coin is, when you see that candle going up there, somebody's buying them, you bet. But there is somebody taking the other side of that trade. It's not like stock where there's a big pool of liquidity, or a situation where there's specific market makers that are just, there are market makers in the futures that are just taking the spread, but and again, if I'm wrong, let me know. I'm wrong by not getting long, I guess. I guess that's pretty clear, but not really. What have we done? Well, we've just clicked over 10 handles. Now, if we get up here to the twos, and we're going to do that from the looks of it, that would have been my total trade. So that would have been a valid trade to have entered, and I didn't. Well, that's bad on me. And I'm not going to jump on there out of FOMO or anything else, because that's got nothing to do with an IB trade. Well, it is 30 degrees C. For those of you Fahrenheit folks, that's 86. And it is 10:20 in the morning. And I'm thoroughly disappointed that I'm not knocking on heaven's door up here. I would have to say that me not taking this trade right here, I would love to say that it was logical decision, but I think more or less fear-based. So that'll be, you know, and that's now recorded here in my journal, right? My. Miss American Pie. Micro Composite. That's pretty weird. Well, we got our 50, huh? You bet we did. There's all 500 of them went zoom. And they traded them out, did they? I suppose. Yeah, there's 580 went out here. And a stop of 220. So there you go. That liquidity is something I've never been able to really nail down, and I've not known anybody that I think is not just an internet doofus that says they have. Sometimes it's a lid on the pot, and sometimes it's a magnet, and price goes to it. I've heard arguments both ways, and I don't know what I think. I've seen it. Been standing here enough days and years that I know I've seen it happen both ways a lot of times. Actually, here's liquidity. Here came price. Lid on the pot. Here's that same liquidity. Here comes price. Up she goes. Takes this one out. Takes this one out. Takes that one out. You know, beats me. I don't know if there's I'm sure that some inside somebody or another that's putting those orders on where knows what's going on, but it isn't me. And therefore you have to trade what you see, not what you expect. I'm trying to see if I can, and this is rearview mirror trading, right? Be really aware of that. Technically, I could say that we consolidated, we came up through it. This could be, you could even call this a bar trade where you break out and retest, break out and retest. And then we came down right here and didn't get under the IB again. And that seems to be the signal to have gone up. This was basically a trigger for the IB failure, which did get scaled, but by the context context of the day suggests a continuation trade. In other words, I'm just thinking out loud here. I used to like keeping this at a tick wide, or in this case 50 cents, where you could see these grid marks. And I've tried all different kinds of things. I tried having 5-minute candles. You can put candles on these book map stuff somehow or another. Here you go. You can put candle charts on there. So there's a 1-minute candles, just for example. Okay, so each one of these candles is a minute. Or you can do other stuff. But I gotta think that I'm of the mind now that the best way for me to keep perspective on scale and price action is to do what I've been doing here that I mentioned earlier this morning, which is keep the entire range of the day in the chart. And I put this vertical line over here at the open of the session, and only for convenience, I can just glance to my left, and if I see that blue line, I know that it's got the whole range. If I don't, I know I've got to do something about it. And I don't have to read the time and figure that all out. And if possible, I like to keep it a dollar high. In this case, it's $1.25. That way I have some sense of scale of the rotations or the movement, and I know what the context is. Whether that, and that and a couple of bucks, and you can get yourself a Starbucks. I'll be right back. Well, boys and girls, is anybody rich yet? I realize that I am I'm not eating my own dog food, so let's put it that way. I should have taken this trade and been without any apprehension and, let the chips fall where they may, because I believe that that is how the market works, and I would be scaled. I would not be at my target yet. That's up here at 62. My second target. But and assuming that I do take some trades and you're here to watch like happens in the past, in the vetting process for these setups, I do not touch bracket order. The risk neutral scale is, the stop is 12 ticks for both contracts. The risk neutral scale is 12 ticks and the profit target T2 is 48. And I don't touch them because if I changed either or any of them, that particular trade could not be included in the data set that I'm collecting or the samples or instances that I'm collecting to vet that setup, because they have to be equal. All parameters have to be equal. How can I look at a statistic that says out of 100 trades, I got to T1 50 times or 175 times, and I got to T2 15 times? If T2 is moving all around, T2's got to be at a constant level. And you have to decide that before you start vetting the trade. So and the reason I'm saying that is, if you were not vetting your trade and you took the IB long or continuation trade right here at 40, 39.75, make it 40 for ease of math. So 43, you're scaled right there. Now price goes up, price comes back, price goes up a little bit more, comes down a little bit more. You might want to start managing the trade a bit. Remember that your scale is right here at 43. You could trail your stop up to this swing low. Now you've locked in this amount of profit. So in other words, you're preventing the trade from blowing back in your face, or even worse, going to scratch. Then you could scale to here. Then you could scale to here. If you did that, you'd be stopped out right here for whatever that is, 66, 5, you'd be stopped out for 3 and 5, 7, 8 ticks, 8 points, 32 ticks rather than 60. If you leave your stop alone, you're liable to get to 60 ticks pretty quick right here. That's strictly something that you got to work out yourself, trade management, after you've vetted the trade and you know that the setup is going to, at minimum, has a probable edge to get you to T1. Because once you've gotten to T1, the worst you can do is scratch, unless you're a screaming idiot and move your stop away from entry, and then you've got a lot bigger issues to deal with than that, But once you get a positive edge to scale to your T1, there you go. It's either going to be a scratch, which is not making you any money, of course. But out of those scratches, there's got to be a certain percentage of them that goes to T2. And in this case, let's watch what happens. I'm going to say we get to T2 here, which is, let's call it, what did I say it was down here? 43? 40. Okay, let's say 40. We need 12 points. So here's there's 12 points right there. There's 52. So the minute we cross that line right there, where the mouse is, oopsie, where the mouse is living, right there. Minute we cross that brown line up above the RTH high, another, 3 ticks above RTH high, that will have satisfied T1 and T2 for the risk neutral trade that I'm betting right now. And yes, I'm disappointed in myself for not having taken that. Because this trade right here would have put all 5 of those contracts over the profit target, and they would be qualified now for XFA. So yeah, it's, disappointing in myself. And that's, I think, I can come up with humans are super good at rationalization and whatnot, so I think if I'm really honest, it's just was a fear of taking that stop, and that's absolutely can't be the case. Once the trade is on, should be no emotion in it, because that it's 50-50. So why would you have that emotion? And like me, most people have mitigating circumstances in life and other stuff. But you have to be aware of them and not, divorce yourself or separate yourself from them as best you can so that you can trade. I like the idea this guy mentioned. Think of yourself as a probability player, not a trader. Your whole world is about probability. Boy, you'd be white knuckle right now, wouldn't you? You got a tick to go for that second scale. Been there, done that. Come on, ladies and gentlemen, get up there, kids. Kick it over that 52. You're a big shot. Let's go. Got 230 living up there at 53 3/4, and any self-respecting day trader would, RTH trader, would be up over 52 and looking for that all-time high. And I certainly wish I was in the trade, but there's a good saying or a good way to think about it. There are no missed opportunities in trading. There is only the next one. Now, granted, it's pretty hard to pay your rent with that or whatever you got in bills, but it's the truth. It's an endless stream of opportunities, basically. And, what good does it do? Don't cry over spilled milk or whatever those old ones, those old sayings. Pick one you like, apply it. We're getting pretty flat on top here, which tells me that we are definitely going to go up, probably with a pop, because we have no excess on the top and it's pretty flat. And that's not usually the case. Think about an auction. It doesn't just stop at a price level. It usually tapers down to where, it's not 100 and cut it off. Usually it tapers down to a few and then it goes the other way. And that's what this is essentially supposed to be, and started out being, was an auction. Not sure how much auctions left anymore with the electronic stuff, but Well, I'll tell you, if these kids don't get up there and get that 52, I'm going to be pretty disappointed in them. And it's 10:40. They're getting pretty close to breakfast and nap time here for this old guy. I hope somebody's on this. You know, somebody in earshot of my voice is doing what I say, not what I do, or however that goes. Do as I say, not as I do, or something like that. Some ridiculous thing from the past. I think it's so strange that link I put in the chat tech, I'll bet you that after the stream publishes, that link is available in the chat, I guess. Yeah, I'm an influencer. Yeah. Let me go make sure they're wrapping my Ferrari right. They're teasing them something fierce here, aren't they? And what is the big picture about 52s? There's no real block of liquidity laying there. That 500 might have jumped up. It had moved up from about 40, I think it was 48.5 maybe, when I took that first snap of it, that 509 or 530. And then it moved it up to 550 last time we were talking about it here, as it was reflected right here. And now I'm going to get my little pointer back at 5200. Being ever careful. Remember something about this active data column. If you select that to trade with your mouse, if I accidentally click on this side of that line, I'm in a trade, whether I'm meant to be or not. So you got to be real careful about that. For quite a while, I only used the dome columns, assuming that I was never going to make a mistake over there because I'm used to that. But as recently as a couple weeks ago, I was trying to draw a trend line, which I never do, to explain something here in the stream. And sure as hell, I clicked over here to move the end of that thing, and boom, I was in a trade. Now, in my trade plan, I have an automatic and immediate reaction to an error like that, and that's immediately to cancel all. And I did, and it didn't cost me only a commission. Didn't cost me 1 penny as far as trading, so that's pretty quick. Now here's the best part. It went on to both targets. So, you know, welcome to trading. The joy of trading. Now, had I not canceled it, it would have, you know, gone against me times 10 probably. No, it wouldn't. It's got nothing to do with me. The market is random, and I just happened to accidentally click it on the right side of random. Come on, 52s. Come on, kids. Big bag of candy up here for you. Look at all that liquid. Ooh, look at that 263 living at 53 3/4 there. Ooh, that looks good, huh? Looks juicy. I would not be at all surprised if by the end of the day they haven't wandered their way to that all-time high. And you can go hear me talk about that and what I thought about this exact scenario at 5 minutes after 8, you know, in the pre-market. I would also not be surprised if after all this liquidity is traded off up here, and all these people are so excited about the fact that we're going long, that it doesn't just dump back to maybe the IB high or even the VPOC and then go up. Two options, completely valid, completely possible in my opinion. soon as they get up to our little, the reason I launched on that diatribe about the active data column was I was going to put in rather than have the mouse sit there, I was going to put in a horizontal line. And I remembered how that didn't work out very well the last time. Well, it worked out fine, but then I was disappointed. Ooh, my little sweetie pie is calling me. That usually means something wonderful to eat. Well, glad to see a number of people here. Hit the thumbs up, drop something in the chat. Good, bad, or indifferent, any opinion. Hello, goodbye, whatever language you speak. And yeah, we're rolling into 11 o'clock here. Now we have just crossed out of RTH 1, which is the first 2 hours and 15 minutes. If you take the number of minutes in the RTH session, divide by 3, you get RTH 1, 2, and 3, which is just something Rod, I think it was Rod again, came up with to kind of subgroup the day so that we can analyze trades. Here we go now. Oh, baby. At T2, I'm so excited. If I wasn't such a useless, paralyzed dweeb, scaredy cat, I'd be pretty happy at this moment. They are certainly toying with them, aren't they? Look at there, 1, 2, 3 times up there, just poking their nose at that high, but not getting through it. What does that do to liquidity? Okay. I would say that there's resting stops or fuel there from everybody so excited about getting short, picking the top. And that seems to be a sickness with retail traders. You know, they want to pick tops and bottoms all the time. Also, there's, as I mentioned a few minutes ago, there's a lot of fuel just under those, say under 42s in that area. All the people that are long and betting on higher and have a stop down there. So that depends on how much fuel is there and which way they're going to pop it, I think. That's my analysis of it anyway. And again, you know, with that analysis, and it used to be with a quarter you could, the saying used to say, with that opinion and a quarter you could make a phone call, but that was in the days of phone calls, you know, pay phones, and and then it was a cup of coffee, and now I don't know, with $10 you can buy a cup of coffee. Isn't that ridiculous? But that's how time flies, huh? How time flies. Oh, come on, man. Let's see if I put in a trade now, you guys are gonna die laughing and I'm gonna be really mad. Oh, there we go. Okay, safe. Phew. So there's a 52s. Now, once we tag that out, that would be the risk neutral package T2 off the IB setup right here. Scale it right here. Well, 53, 43 right there. And then that's T2 or 48 ticks. So that would be a total of 60 ticks. And then with the trade copy to the other accounts, that's 300 ticks. So that's pretty nice. And all 5 of those combines would have passed the profit target. They're 50,000 combines. I'm not sure if I mentioned that. That's what I'm talking about. So the profit target is $3,000. They would all pass the profit target and be in the XFA. So let's see what happens here. Yeah, welcome to the stream. Drop something in the chat. By all means, I'd really be honored if you click thumbs up and subscribe. That would help a lot. This is my virtual journal, so primarily I'm talking to myself here, and I share it and let people listen to what I'm thinking about. And come on, kids, get that target. Let's go. This is not a real trade. This is hypothetical, right? So this is, if this were a real trade, there would be a entry and a stop and T1 and T2, and any kind of movement is graphically, very plainly and graphically recorded and illustrated here in Bookmap. That's why I've slapped this blue horizontal line up there just as a hypothetical where I would have gone, where I would be had I not wussed out on the entry. And if you're a bar trade guy, which is breakout and retest, there's your consolidation, right? Breakout, retest, breakout, retest. I don't know, that's real subjective to me. What time frame you're looking at, if you're, depending on your time frame, we're in a downtrend right here. You know what I mean? If you're trading in 10-second tick chart or something. If you're looking at a yearly chart, we've been in an uptrend since I think the 50s or something, you know what I mean? One thing that's funny to me, I noticed on the starting soon graphic for the site, this stream, next time hasn't started yet and you notice that, look at the price of the S&P when I did that screen snap. First, it's a completely different configuration of Bookmap than I use now. It's with all the colored heat map and all the bubbles and all that stuff. And the columns are in different spots and things because it's a couple years ago, I guess. But look at the price. Notice the price of the ES when I made that snap. It's pretty interesting. Oh, here we go. And here's the coup de grace right here. This is the VPOC migration. Didn't point that out. Sorry about that. You can easily see when those are going to happen because, as pointed out in the pre-market, the POC just marks the price of where the most contracts have traded in the session. Right here. Previously, it was right here. And all you have to do to know when this, VPOC migration is incoming, here's 7,814. When you see something up here starting to build 7,800 and whatever, it's only got to be 7,815, and this yellow line is going to move there. That's all there is to that, the whole story of the POC. There's a lot of psychological analysis about it. Well, that's indicating that buyers, traders are saying that value is building higher, and yeah, all of that stuff can be valid. But just on a mechanical level for what we're doing right here, right now, to know when this is going to migrate, just the numbers, like everything else. Nothing mysterious, nothing magical. I'm going to sell, pointy wizard hats and magic wands in the merch deal when I start it. Oh boy, it's amazing. Some of the stuff you see in here is just phenomenal. This would, in my opinion, give impetus that we were going to trade higher into these higher liquidities. Also, quite often, the IB migration or the VPOC migration trade, it'll trade back down under it, sometimes to what they laughingly referred to as price check at aisle 3, which is where it came from. So that is that's an obvious setup. How can you possibly miss where the yellow brick road goes? But it's one of the least profitable setups that I've traded. There we go. That would have one more tick. There you are. Now it would have taken out my I would have now had that complete trade to both targets. And I'd be pretty happy at this point because all 5 of those accounts would be past profit target. And I'm standing here having done nothing. So that's if nothing else, learn by example. Don't do what I do. Maybe. I don't know. I'm going to see what Mama's got calling me about out here. I'll be right back. What kind of tomfoolery these kids get up to now? Well, they got another 1.75 out of them. Yeah, that's pretty disappointing there. That's a classical example of anticipating the trade, narrating the trade, and wussing out not taking it. And there's no excuse for that. That's not eating your own dog food. Me not eating my own dog food. So that's a big no-no. Wow, what a surprise, you know. Did you see the look of that guy? Yeah. Of course, yeah, you know, those numbers have only been something the market has relied on for nearly 100 years, and now this genius is going to come in and he has a better idea because his Lord and Master told him so. They're going to mess around with the fact that we're going to lose the dollar as a reserve currency, and this place is going to fall flat on its ass if they're not careful. I keep expecting, you know, what am I going to do? But I keep expecting somebody on high to step up and go, wait a minute, this is crazy. We're not going to put up with this crap anymore. No, you're not going to do that. But I guess it's a possible reality that there is not anybody with enough horsepower or balls or whatever you want to say to do that. I don't know. All I know is it's pretty darn disappointing. You had to take one look at that guy and I went, oh boy, here we go. The thing that I find the most alarming about this stuff is when you look back, like J.D. Vance, as much as 2 years ago, or well, I don't know how long it's been now since they've been elected, almost more than half a year, couldn't say enough horrible things about how he thought Trump was a fascist Nazi and could never support him in a million years because he was a fraud and a crook and blah, 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 blah. And it's all on video. It's all in an interview that you can find on YouTube and watch. You know, it's not fake news. It's not any of that crap. And suddenly flip around to not being able to kiss the guy's ass enough to, you know, it's just astounding to me. What bothers me about all of that, and the Supreme Court, what bothers me about all of that is, where are their principles? They sell their principles 100% for money and power. That's it. Trump is Trump. He's been the same guy that I've known about for 40 years. You know, gone bankrupt 13 times and stiffs everybody on his bill on not paying them and fraud this and something else that. Not anything new. You know, Trump University and Steaks and Trump Airline and all this crap, all complete failures. The Trump Taj Mahal is still standing vacant with millions of dollars worth of unpaid bills and liens against it in Atlantic City. You know, that's nothing new. But all these other people that have come into the orbit, which seem to have completely sold out their integrity, is really strange to me. And I'm the first to say, I don't want to be the guy that thinks everybody in the band's out of step with me, you know? But I think I have a fair moral compass. And I've lived long enough to know, you know, I've spent most of my adult life living in third world countries that were along the equator by and large. And I've seen good and bad, and I've, you know, this takes the cake here, I'll tell you. I never would have expected this kind of thing in America, myself. Just speaking bluntly and frankly, and I know that's probably not the right thing to do in this forum, but that's how I feel. It's really weird. You expect this kind of shit from some, you know, like that little useless putz in El Salvador. You know what I mean? You expect that kind of thing out of him, or Maduro in Venezuela, or somebody like that. You know, Sesi Seko in Zaire. But you don't expect that from the America and the President of the United States and the Congress and the Supreme Court and all those checks and balances that were put in place by the Constitution. And now this doofus thinks he's going to change the economic reporting and around because I guess maybe he figures he can keep his job. This way he can keep his job for a month. I mean, really, isn't that incredible? The last time they tried to get tricky, the bond market stepped in and slapped them in the face, and they immediately postponed everything. The bond market is about 50 trillion, I said with a T, $trillion market. It is the American debt. They just raised the debt limit $3 trillion or 3 point something trillion dollars. This current administration, the big beautiful tax bill, just raised the debt limit by another something trillion, 3 point something trillion dollars. The way we pay the debt is by selling bonds. The largest holder of American debit credit, our banker, is Japan and China. Beats the hell out of me what they're thinking or how they're, you know, imagine walking into the bank, walking up to the banker, pissing all over his desk and saying, "Oh, by the way, I want a mortgage for this house over here." You know, that's essentially what we're doing. I think it's so bizarre. If it wasn't so serious and happening here in my country, you know, where I was born and raised, it would be funny if it wasn't so serious. But I don't know it used to be that we had checks and balances. The Supreme Court would have never put up with all the shenanigans. The Congress wouldn't, but now everybody's in lockstep for whatever reason. I guess they're so deathly afraid of their money, their salary, and their, you know, obviously they're all on the grift and all the cum. That they don't want that money faucet to shut off, I guess. At least me. I don't know. I think I'm more surprised about the Supreme Court than anybody else.
Que hoje eu vou ser o seu calor. Sei que tá friozinho, já sei como é. Sei que o nosso amor aquece quando quer. De manhãzinho o sol nasceu. Esperança de beijinhos. Não espere tanto, tanto tenho a dar pra fazer o frio evaporar. Deixa de preguiça, deixa um cobertor. Deixa que hoje eu vou ser o teu sozinho, já sei como é. Sei que o nosso amor aquece quando quer. De manhãzinho o sol nasceu. Deu esperança de beijinhos. Não espere tanto, tanto tenho a dar pra fazer o frio evaporar, pra fazer o frio evaporar, pra fazer o frio evaporar.
Okay. Didn't get too far with it, did they? Now the sense of scale is getting skewed for me here because of the range we're getting into. I can't keep these within, it's $1.25 here now. Well, we're after 9:20. Welcome to the stream. Slap something in, smack the thumbs up. Subscribe. I start the stream every morning at 8 o'clock where I do the explanation and the setup, the numbers coming up for the day, the pre-market, and where I expect we're going to go and what we're going to do. This is my virtual journal. Just to re-explain this because there's quite a few more views here, so I guess that means there's people hanging out. I capture everything I'm watching on the monitors, obviously, in the video, and then my voiceover provides insight as to what I'm thinking. Bear in mind that most of the time I'm talking to myself, right? So when I review the stream tonight, 2 years from now, I know what I was thinking at the time. It's not for financial or trade advice, and it's not monetized in any way, the stream. So it's strictly for the reasons I put forward here. And the reason that the stream is so long, 7 hours a day, is because I have a very serious commitment to not to take any trades off the stream. And so, for purposes of transparency and accountability. That's why the stream goes from 8 in the morning with the pre-market through the cash close at 1500. All times here are Central Standard Time that I refer to or that are on my charts. I use 2 platforms. This is Bookmap, and this is IRT, which is my basic charting platform. I track and plot the mini ES, the mini NQ. This is the ES micro composite, the ES volume, a market profile, and I also do the micro. Same instruments, just the micro version. Every morning I go through how we determine the open type, the statistics associated with the price levels. Oh, I forgot to mention that in IRT. This is the micro composite column chart, which is just simply a RTH session chart with daily candles. Wherever price overlaps, I draw a volume profile around those bars. That generates high and low volume nodes, which are these red and green lines. They push automatically to bookmap. This is essentially my high time frame chart. The session prices also push to bookmap. This is the micro composite chart where I manually enter the values. Let's see if I can show you something here. Yeah, here you go. These are the high and low volume nodes. Market profile full session started at 1700 last night and will continue through 1600 tonight. RTH volume profile, which started at resets at 8:30 this morning. This is my notes column, which is very important to me. That's got the open type. I change that column title every day to reflect the current open type for the day that we're in now, the session, the RTH session. And I do that because when I go back and look at a screen snap or the recording, I can look at that column title and it gives me a lot of information immediately. Then the open type also dictates which statistics column I use associated with the respective price levels. These are statistics or probabilities of that these prices will be revisited in the upcoming RTH session. What's happened so far? Previous IB, value area low. This was the IB low, this is the IB high. Overnight volume point of control, overnight mid. Mid is in here somewhere. And the overnight high. And they are just statistics. They're not hard and fast lines in the sand. They are statistics based on a data set of 2,000 days. So the data, the program looks back at 2,000 days and determines what probability each one of these price levels was revisited. Do that all in the morning before the open. So, tune in before the open. What can I tell you? Every day at 8 o'clock at 0800 Central Standard Time. That is, and now here we are trading up at a new all-time high. Oh, well, not a new all-time high, but a new high. Let me point this out to you, which I discussed quite a bit in the pre-market. This was the all-time high in the ES put in 29th of July in the RTH session. This is the current all-time high of the ES, but it was put in on the 31st in the ETH session, and we have not gotten back up there yet. And I've been talking about this every day for a few days now, that will not hold. The RTH session traders don't like TH to have big records or, highs and lows, things like that. And before this is over, that's going to be taken out. And it may be today the way we're going. Now, the trades that I'm working on vetting are the IB statistics trades only at this point. I have no trade that I could act on up here, no VPOC migration, nothing like that. I'm working on the IBs, and I missed this IB continuation trade this morning, and it did play out to both of my targets. So that's my problem, my bad. And I think that kind of brings us up to speed here with where we are. at the moment. As far as the news goes, you know, what to say. Here's the new guy. He's been in there less than 24 hours, and he's going to stop the jobs report. He's only going to put out the jobs report monthly instead of going to suspend the monthly jobs report, which has been going since the early, I have to Google this to be sure, but I think it's been going since right around the 1900s, right around the turn of the century, about 200 years. And this freaking genius thinks that he's going to come in because Trump didn't like the numbers last Friday. The non-farm payroll report number, he immediately called fake in the news or rigged, fired the director of the labor statistics, and then yesterday appointed this guy. Pretty weird. Pretty third world-ish, even if you say it fast, right? Now we are approaching little, whatever her name is, press secretary is going to have supposedly a briefing. No more news today. Some related stuff over here. The news that I refer to and that I look at is Financial Juice. This is free. And the investing.com, which is also free for the reports and the earnings stuff. Nothing is a secret. I try to be as transparent and open about everything as I possibly can here. And I figure, remember, I'm talking to myself and this is my journal, and I'm happy to have other people chime in, listen, learn, laugh, trade the opposite way, whatever the hell it is, you know. Hopefully it helps in some way, someone else. And in my, you know, certain benefit of it is catharsis for myself. When you teach, the best way to permanently learn something is to teach it. I'm not teaching anything here, but I also believe it's very definitely believe in the fact that your subconscious mind believes what you tell it. You know, every morning you get up and look in the mirror and tell yourself that you're a fat, ugly loser, and guess what? I'm not saying you get up every morning and tell yourself you're a smoking hot, you know, multi-gazillionaire, that's going to happen either. But I think it's more subtle, like, oh, I just can't control my emotions, or I can't control my reaction. I just can't not overtrade. What kind of crap is that? Of course you can. So I think it's more on that level, but maybe I'm wrong. Maybe I'm completely wrong. But again, this is what I think, and I'm talking to myself here. Okay, what else? So I've gone around the horn here pretty much. The news is pretty crazy. I think this jobs report thing is going to blow up in their face. That's pretty shocking to me. I started trading in 1999 actually. And non-farm payroll has been a big thing then and as far back as I can remember. And it is one of the key metrics that our economy looks to for direction, guidance, and a measure of our economy. You know? Really, really slippery slope, looks to me like. And here we go. Now we're up here at 68.5, I guess, is that all-time high on the 31st. And I would say that by end of the day, we're liable to be right there. Pretty crazy, huh? Pretty darn crazy. And of course, the higher this goes, the more disappointed I am in myself for not being along for the ride. However, as I said before, I'm in the vetting process, so there is no changes to the original risk neutral bracket package. In other words, I'm not gonna, okay, we're gonna target this all time high. I'm putting T2 up here a couple ticks below this, and then I'm gonna trail my stop up below these swing lows. That would be typical trade management if you were not in a vetting environment. But you can't change any of the parameters if you expect to have a statistically significant data set. And sorry, I keep forgetting to switch monitors for some reason. I would say no chance of a neutral day. Clearly, the inside day is in terms of the IB, is out of the question. I share these session prices freely, and no worries. If they would be of help to you, if you're using Bookmap and you want to throw them in a Cloud Note column, or if you put them on, figure out a way to get them into Sierra Chart or on an Excel sheet or whatever you want, let me know in the chat, and I'll figure out a plan. I share them with a lot of people in a couple of different places, and they are live, continuous from 1700 on Sunday until 1600 on Friday, until I go out of business or fall over or something. That's the way it's been for a few years now. So there's that. Ow. Ouch. And now, what else can we do? Nice to see some numbers of people coming in here, I guess. That's what that means. I'm a real non-professional broadcaster, influencer, whatever. I like the idea that I heard last night of, I'm not a trader, I'm a probability. I don't like the play word though, but probabilities are definitely the secret to professional, consistent, profitably running a trading business. It's a probabilities business. Jim Simmons at Renaissance Technology, the most successful hedge fund of all time ever. Average 66% returns for something like 25 or 6 years. Think about that for a minute. The Standard & Poor's, the S&Ps, I think, averages around 8%, if I'm not wrong. And all on statistics. Only mathematicians and physicists and statistical people. Would never hired one finance trained person ever. As from his own mouth in an interview. And he was a gifted and awarded mathematician and math professor at first. And then, Paul Tudor Jones and names that everybody is aware of all feel the same way. It's all statistics and probabilities. And the sooner you figure that out and realize that the outcome of the next trade is 50-50, you can't predict which way it's going to go. You're going to take a percentage of your entries or trades are going to be stops and a percentage are going to be wins. And you need to have the risk reward thought out and planned in such a way that the reward is greater than the loss, and that both of them, of course, are within risk tolerance. And that you've got to do that yourself based on your environment, your risk appetite. If you're trading a combine account or a evaluation account, likely you have a daily loss limit. Well, that's the first part of your risk management right there. How many trades? You don't want to take 50% of your account risk. Risk 50% of your account on every trade. Now that's what the YOLO guys and the people that are approaching this prop world as a game. They throw a Hail Mary pass, and if it hits, they get funded, and if they don't, they buy another combine or whatever the word is, evaluation. That's a completely different world than what I'm talking about. I treat every trade in this account exactly as it's my own money in my own live account, my own risk. I would never dream of YOLO and something. I've experimented with stuff like just to see what it would be like or how they do that kind of stuff. But in this environment in the day-to-day thing, no way. And I'm actually too risk averse probably at this point. Like not taking this trade today, which actually met my setup criteria right here and my trigger, and I didn't take it, and it went to profit targets. And had I done that, all 5 of these combines or evaluation accounts would now be funded in X of A's. So, because they're all 5 of them are about one of these trades away from passing the profit target. Neither here nor there. One of the reasons I'm doing this, and that I think it's an important contribution, is that it's good for me, obviously. That's the first thing, selfishly. And it is completely transparent and accountable. So that should give someone a bit of hope or faith or, confidence or whatever that, okay, this is something that that I can actually do, rather than all of the smoke and mirrors BS that you see floating around the YouTube and the internet. Is just astounding. Anyway, there's that. And then the point of view of approaching this as a combine, or these various combine, or evaluations, whatever you want to call them. If you can't make money cannot be consistently profitable in a sim account that you pay $50 or whatever dollars a month for, why in God's green earth do you think you should put your own capital at risk? I think that's the stupidest thing that anybody can do. Myself. So there's, that's part of the thinking involved here. That's delusional is what that is. Well, we are now zooming in on the 12 o'clock hour here pretty quick. We've gotten up here. I would imagine that when I get back from the midday break that I take usually, we'll probably be at this all-time high. Wouldn't surprise me. Excuse me, at all. We don't have a lot of big liquidity left. That 500 and change that was up here at first at 47 change and then 50. Look how far below us that was. You know? And we just continue to grind higher. If you're not trading one of the setups like I am, the IB, for example, and you're trading the VPOC migration, well, there's been two beauties. There's one, and there's a second one. Tradable too. I mean, in direction of context. Now, this is an IB or a VPOC migration that has been received a lot of focus with myself and Rod and the people at Static. More of those guys. I read them, talk with them about it. When VPOC migrates outside of the IB, either way, but here we're looking at this one, outside of the IB by at least 3 points, then there are some statistics about it revisiting the IB, and I don't know them off the top of my head, so I will not just make some number up and quote it. And or does that suggest that we're going to continue on in the direction of the context, blah, 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 all those things? Right here was falling off a log simple. No real pullback that would take you out. Or am I lying? 32. Yeah, you'd have been out right there. If you got in right there short, you'd have been stopped out right there on that one. 3 points. How about up here? I mean here, sorry. 3 points. Up here, nope. Excuse me. So there's a couple of VPOC migrations that would have essentially taken you from 32 to 57. That's pretty cool. 25 handles. You don't have to put yourself in. Another thing about not trading a lot and trading a bracket like I'm talking about, and with a planned, anticipated entry and setup, a couple of things happen. Number one, you're never in a big hurry. You anticipate well in advance what the setup is getting ready to happen, and am I getting the parameters and the trigger? And this is me making a fool of myself, not taking the trade here, but let's be honest about this. So there you are. So there's not a big hurry. You're not panicked or stressed or anything. You anticipated. Methodically take it. Unemotionally you should be unemotional about it, because you know that the outcome of the next trade is 50-50. So could win, you could go your direction or not. That's important. And also, by not putting if you're scalping or 50 trades a day or what the hell ever it is, you've put your account at risk that many times in the day. However you've managed your risk. Now, if you're a one-to-one person, that's suicide. So you set up a bracket that no matter, first of all, if you did trade that many times with the bracket, because there was that many setups, you would have a multiple risk reward built in. And number two, because of the nature of the market, you don't have those opportunities, and you're disciplined and you're trading your setup. You're not, clicking the mouse like you're killing snakes. So that limits your exposure to the market and your risk exposure to the market. And because you have an X multiple setup, for example, if I hadn't wussed out right here and just taken my trade, there's my scale, doodly 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 doop, and there's my target right there. Okay, there's T2. Now that is 60 points And if you want to convert that to money, that is $750 in 10 until in basically an hour, 57 minutes. Do y'all make $700 an hour? You know, how many of those you got to have a day? You put your money at risk, yourself, your account at risk one time. Now, the guy that's scalping this thing, he's taking a long and he's getting a point or two and he's losing a point or two, and he's, you know, you got to do, this is 60 ticks. So, you know, that's a lot of scalping. Only 15 points, mind you. And if you weren't vetting the trade, you could be looking at a lot more than that. But that's the way I think it makes sense to approach the market as a sustainable, consistently successful business. If that's what you're after, if that's what you want to do, that's what I want to do. That's what I have to do. Support myself and my family. If you got a nice job or don't need money or whatever it is, and you get off on the adrenaline rush of scalping it on a 2-second chart, knock yourself out. That's perfectly fine. You have to determine what the end goal you have for the market is, and then develop the best way to achieve that. That's what I believe. That's my story, and I'm sticking to it, as the old song goes. And we're going to get this all-time high, sure as the damn world. We're only 10 handles away from it here now. What a crock of crap. I tell you, when this market falls over, it's going to be breathtaking. The downdraft is going to be breathtaking. And all of these guys, like this new labor twit, is going to just, hopefully they'll get just ground up under. I don't know what all is going on. They had the military come in and take over DC. I mean, really? Our nation's capital? It's pretty crazy. I don't understand any of it myself. Yeah, doesn't make me sleep good. I'll tell you that much. Stops. What are all these stops up here for? Well, remember, look back in the stream about an hour or so ago and listen to what I was talking about with all these people trying to pick the top up here and where their stops would be. And that's the way it works. Some people just can't help themselves, you know. It's about as uptrend as you can possibly get, or up, context is about as north as you can possibly get, and you can bet your butt that there's about more than a handful of people that are trying to pick every top for that big glorious bragging rights short down. First thing you need to do is completely divorce yourself from the winning idea and the bragging idea and the feeling good about being right idea. It's statistical. Is your edge, when you calculated the statistics, was 55% positive edge, and with a minimum win rate of 40%, let's say. However those statistics would work out. And as the days are going, every week, every 2 weeks, every month, whatever, you look at those statistics, and is it within those parameters? If it is, you don't fix anything, and you keep trading it. That's a statistical business of probabilities. Not, oh Christ, I've had 6 stops in a row. I'm going to throw it all out the window, and I'm going to start whatever. You know, I can't think of another. I'm gonna start doing the opening range breakout. You know what I mean? That's not it. I don't believe that's it. Let's put it that way. Sure as the damn world. Sure as the world.
Noches llenas de amor, corazón, hablarle en poesía, cantarle a tu alma y llenarla de ilusión, amor. Sientas dolor, quiero acompañarte hasta que te salga el sol, besar todas tus lágrimas y darte todo mi amor. Cada día por amor, corazón, todo lo que viví fue para prepararme y reconocer tu amor, amor. Sientas dolor, quiero acompañarte hasta que te salga el sol, besar todas tus lágrimas y darte todo mi amor.
Well, we've got about 10 handles to go here. And we are at that magic all-time high. Pretty amazing. I actually didn't think it would be today, but I did expect it this week. And I think you can go back in any of the streams up to and including last week and hear me talk about that, because that's always a big thing that jumps out to me when we have any kind of a record or high or something, even, and it boils down even to the overnight high. You know, if the overnight high is just as it is here. The overnight high was higher than the previous RTH high. Well, they're never going to listen for that. That took them how long? It took them literally, well, here we are. It took them 9 minutes to fix that. You know? So there you have that. Well, I'll tell you, that is pretty darn weird, that jobs thing. That is just surprises the hell out of me. They must have a sense of, they must feel secure enough in their position and whatnot to make such bold and apparently irrational ideas, you know, statements like that. That they're above impunity, right? They're above what anybody thinks, I guess. I don't know. I'd be embarrassed to say something like that. The previous guy who had been there for years, first of all, to say the head of that department had anything to do with the collation of those numbers or the dissemination of them, I would question. But anyway, I'm sure there was a process that has been used every month for nearly 200 years. I have to look up how long they've been putting out the non-farm payroll. For a bunch of years. And those numbers didn't suit Agent Orange, you know, Trump. So they were immediately branded rigged and fake, and he fired the guy. They collated the numbers, they put them out, and as typically and as always happens every month, if there are any corrections or additions or edits discovered in the course of the time after that first Friday, there are updates to the number to make it as accurate as possible. And that is what the world has come to trust about American finance and American markets and American law, the rule of law and the stability of the government. And so the answer of this new outfit is, well, fire that guy, and the new kid says, well, we're just not going to put out the numbers. Now, in my opinion, that is the ultimate rigging. But I'm sure I'm in a minority, but Jesus Christ. Next is going to be why we don't need elections. That's where this is all going, I'm sure. I stand on record here in the stream. That's the goal. Getting used to having military come in and do police duties, taking over cities like DC right now. Yeah, absolutely. That's where this guy wants to go. And he actually made that statement in the election. This is the last election you'll ever have to vote in. He actually said that. It's on record and on YouTube and anywhere else you want to go look. In not some crazy, Breitbart or some of that bullshit, but on like Fox News or the major news outlets. That's an actual quote from Trump. I guess he's going to try to make it happen. Pretty weird. And then has methodically put in place people to support. Last time around, he had guardrails. People were there that had experience and that fought and had the horsepower to stand up and say, no, that's a bad idea. He learned from that. You got to hand it to him. He learned from that, and he has now got a collection of spineless puppets. Lapdogs, I guess I don't know what else to say other than it's disappointing to me that this is happening to the country. More than disappointing, it's really saddening. And by extension, the world, because America was always looked up to as the beacon of honesty and, you know, fairness and law and order and stability. And that is going out the window at breakneck speed. I'm afraid. Anyway, enough of that crap. That's why I don't look around at the news, but that story about this new labor thing, that threw me for a loop. So we're pushing up towards a new all-time high because everything is so great in the economy. That's great. It's good for equities for sure. And that's, remember, this is the S&P 500. That's what this future is about. So if you got long on, if you're not trading or vetting something as I am, and you got long on any of these VPOC migrations, that's been really nice. Congratulations. What other setups that we look at frequently are involved here or have been involved here? I don't really see any, to be honest with you. Ones that come to my mind are, well, the overnight high is one, and the extension of it, which is basically the drive up here. Then there's the ones I'm working on, which is also turns into the IB and the IB here, continuation. Typically, there's like VWAP to VPOC and mid to VPOC and those kind of setups that V reversals. I don't really see any other common setups that we refer to or talk about a lot that have come to, that have, you know, manifested today and come to fruition, except for the VPOC migration. The VPOC migration, but more importantly, the IB continuation. Well, that's amazing. Sorry about that. Okay, little Miss Levitt has given her is giving her news press conference, whatever you call it. I will definitely step away for that. It's a good time for me to rummage around for a snack or two. So, you know, keep your powder dry. I don't think there's absolutely any trade that you try to get into at this point is FOMO. That's my story. the setups that I have have statistical merit and have been vetted by myself or others, primarily others, but others who I trust and I believe do the work, are over with, you know. The rest of it is just, now, let me say up front, I do not trade breakouts. And I actually have an error code for that, because for me, a breakout is a FOMO trade. I'm late to the whatever party it is, and I see us breaking out, and I don't do it anymore, but I used to just think I was going to get on there. Well, I'm going to get the last little bit of this. To me, it's a FOMO trade, and I have an error code for that. I realize that breakout trading is a very real phenomenon, and you know, it's the trading methodology of the turtles, for Christ's sake, and they made $5 or $6 million or $500 million, some astronomical figure, under, you know, with Richard Dennis's tutelage in a few years. So yeah. But I say any trade now is FOMO. So take a deep breath. It's 12. The 12-to-1 trade could come to pass here today, and that is a situation that says if the market is out of balance, and it is pretty much out of balance, 1, 2, 3, 4, 5 distributions and trending up. Context is definitely north. That shouldn't be any question to anybody. If the market makes a new higher low, a new whatever, higher low, I guess, between 12 and 1, there is a high probability, and I don't remember the exact number, high probability that the high or low put in during 12 to 1 will be exceeded by price in the remainder of the RTH trading session, which is 1, 2, 3 hours, right? Oh, yeah, 2 hours. So there's that. That's not something I vetted or that I trade here, but that is a setup that is definitely been looked at and tested out. I'll be right back.
coisas chegam quando passam. Se o que aconteceu de errado, veja bem pelo outro lado, é o que faz você agora. Todas as migalhas do passado vão viver tempo de glória. Pois é, o tempo de Deus não tem razão. Até o dia que soltarmos que nos foi presenteado esse pássaro na mão. Seu assovio é tão lindo, é o canto do perdão. Pois é, as coisas chegam quando passam. Se o que aconteceu de errado, veja bem pelo outro lado, é o que faz você agora. Todas as migalhas do passado vão viver tempo de glória. Pois é, o tempo de Deus não tem razão. Até o dia que soltarmos que nos foi presenteado esse pássaro na mão. Seu assovio é tão lindo, é o canto do perdão. Pois é.
Salgo a caminar al sol por nuestro lago y por donde mire te veo en todos lados. Tantos recuerdos, cuánto hemos pasado. Ay, amiga, cómo te extraño. Ay, amiga, te extraño. En nuestro universo todo era posible. Cantamos, reímos. amistad nos hacía invencibles. Siento tu presencia cada día. Toda tu luz, tu magia y energía para siempre serás parte de mi vida. Ay, amiga, cómo te extraño.
já sei remar contra a maré. Mas não venha me pedir pra andar de ré, pois é. Ah, eu cresci no gueto, eu cresci com preto. Não é você que vai fazer eu me enganar.
Well, we didn't get there yet. We got a tick, right? That's pretty funny. I hate it when I'm right. Not really. Boy, every one of those VPOC migrations has worked out well, hasn't it? That's got to be in my opinion, that's a rare, it's a rare occasion. Okay, so here we go into the power hour, pretty close. Again, this is the just a vertical line I throw on here at the session start so that I can just glance out of the corner of my eye and make sure that I have the entire session visible until I'm going to anticipate interacting or trading, and then I can scroll in. Keeps me in touch with context much better, I believe. Look, well, we've gotten 2.5 points here, or $2.5. these VPOC migrations have been surprisingly great. As I said earlier, that's not one of my profitable setups. But boy, today they've been smoking for the tune of 30 points or more. Here's an interesting graphic. Here's the budget balance for the month of July. Federal receipts, 338 billion. Output, 630 billion a month. And let's raise that budget. Let's raise the deficit. This last go around, these fellas back there just raised the deficit $3.6 or $4 billion, trillion dollars. I'm sorry, $1 trillion. Does this look like it is sustainable to you? What would happen if this is how much money you made? And this is how much money you wrote checks for to your bank. Do you suppose that this would be a nice thing to do? What a phony. And let's build a $200 million ballroom on the White House. I just think there's such a... Wow, I think there is such a separation between common sense and what's going on. I am totally amazed, actually. But nobody's asking my opinion, so I'm going to keep it to myself here. Let's take a run through the roses, shall we? A run around the park, whatever you want to call it. So here is today's RTH session in the ES. First of all, these are the minis. ES, NQ, ES Mini, high time frame micro composite, and the ES Mini market profile. Now, here we go. So that was, without a doubt, talk about turning the tanker, right? Here we go. Higher, lower highs, lower lows, and then kaboom. Straight up, they turned that old ship around and away she went. On thin air, I might add. Let's check the volume here. I'll bet you it's on light volume. Oh, yeah. only up to 90. What's that? Only up to 98% now. So this was down in the 70s when it started. So there, you have that. What's going on with these guys over here? Oh, ATR's clear down at 250. They just been plugging up slowly and slowly and slowly. And the open interest is way off. Harmonic rotations, again, if anybody knows how to incorporate this data, which is good data, if anybody knows how to incorporate it into our trading, my trading, I've got it to try to help analyze my setting my stop values for the brackets for my multi-bracket, my risk neutral scale, risk neutral trading system. Anyway, let me know in the chat or something. Here's the these are the these are the micros, same same setup, same everything, but these are micros. And here we go with the minis, back to where we started. The micro composite here, all I can say is the market goes up to go down and goes up to go down. Of course, that's what's going to happen. If you want to look at the bigger picture, we've just gone into we've just turned the corner into the power hour. See if I can get all this mess on the screen here. Come on. No, not quite yet. Let's check. Ah! Come on. Okay. The market goes down to go up. This is tariff guy here. And now we've been doing this ever since. And here we are today. And there we are for a long time ago. This is from December of 23. December of 23. Remember that this is an RTH only chart. This is daily session only. That's why you don't see the all-time high up here that was put in on the 31st of July, my son's birthday, by the way. Round of applause. In the ETH period, because this is only RTH, then these are only daily bars. So you see what we've been doing and how I do these. This is RTH session. These are daily bars, and wherever price overlaps, I draw a volume profile around them. When there's a big gap up, start over. And that generates the micro composite VPOCs and the rest of this. The high and low volume nodes, which are these red and green lines that are pushed automatically to bookmap. The session prices are also pushed to bookmap automatically. And there's bookmap. So the micro composite stuff, which I enter manually, these levels and things are here. The high volume nodes are in this column. Right there. And this is the full session volume profile, which started plotting at 1700 last night. RTH volume profile, which started today at 0830. Incidentally, all the times that I mentioned and that which are visible on my screens here are Central Standard Time. And this is the notes column, which is so important to me. The open type, migrating VPOCs, which I have not put this one in yet. Bad boy. Mom's going to spank my butt. And then the percentage, or the statistics for the associated price levels. These are the session prices pushed by IRT to Bookmap. And I share these openly and freely, so if anybody wants the link for these to put in their Bookmap or wherever, just let me know. Like, subscribe, drop a note in the chat there so you can, and I'll hook you up. I start pushing these live on Sunday night at 1700, and they go through the week nonstop and live until 1600 on Friday. So there you go. What a deal, huh? Look at this. So you think they're going to actually... Do you think they're going to actually get within one tick of this thing and then not take it out? Oh, how dramatic, huh? I'm sure that somebody thought that was pretty funny to add a little high drama to the mix there. I guess you gotta make fun where you can, I guess. These are this is my heat map. You'll notice that there are no indicators on any of my charts or my heat map. Not that, that's fine. If they whatever works for you, makes money for you consistently, and then by all means do that. This is what I do. This is my virtual journal, and this is what I do. And if what I say and do helps somebody, that's really great. And I certainly don't say that anybody should do what I do. I do think that some of the underlying principles that I believe and that I talk about here, managing your risk, fundamental job as a trader is to preserve your account. I mean, those are, that's like, don't light yourself on fire. I mean, those are things that are universally applicable and correct in no matter how you go about trading. Whatever you use, market profile, a chart that's got so much spaghetti on it you can't see the price movement. Whatever works for you and makes you consistently profitable, that's great. But the stuff that I feel is universally applicable, like risk management and those kind of things, works well over the long haul. So there you go. There's the POCs here, which are just the price at which the most contracts have traded so far in the session. And that happens to be right here. The minute one of these prices is higher than 90, whatever this middle number is, because I got them squished down too much, let's say 9,200, the minute one of these is 9,201, that yellow line's going to move there. That's all there's to it. This is the VWAP, RTH, VWAP Globex, the mid, the initial balance, which seemed to confuse some folks. That is just it's an old market profile acronym for initial balance. What they really represent are the high and the low of the first 1 hour of the RTH trading session. Nothing more than that. And this is the full session POC. You notice it's a little more muted yellow than the RTH. And that's it. The rest of these levels are just, self-explanatory. Overnight volume point of control, the open, value area high. One thing that is maybe of interest, the value area high or low differ from the developing value area high and low in that the developing means the current auction. Just the value area high or low represent the previous auction. And in this case, by setting my IRT charting to full session, the previous auction from now is yesterday's RTH. So the value area high and low here, and And I do that because the people who use these levels in a couple other places would be confused if this were to represent the ETH. So this is for the current RTH session. And there you go. We have just methodically and traded our way, just ground our way, right straight to the top. And just as I was talking about and pointed out in the pre-markets this morning, not that I'm, any kind of a soothsayer or a fortune teller, but it's the stuff that the market does. I'm currently vetting the IB trades. So the only trade that I was watching for today were the IBs, and that would be this one, for example. And that's the IB continuation. Very good setup. A little bit gray on the setup, on the trigger, but I did not take it. I talked myself out of it, which is an error on my part. Let's go down there. Right here. And that's pretty much of a bar or whatever you want to call that. And the trigger would have been this right here. I should have taken that. There's the scale. 3 points. And ultimately we get over here to 52, wherever that went. Way up here to 52 someplace. And that was the 62. And that was the T2. Would have been the T2. So that's a missed opportunity on my part, and there seem to be more of those going around lately than I care to have happen. So not good. The risk neutral scale, etc., that I'm talking about in my trade management is basically this. This is the smallest risk neutral package you can have, multi brackets. This is the way I prefer to trade. But it's the same principle. This just does it automatically. They need to be even numbers of contracts. The scale for the entire package is set at one stop. I'm sorry, not the scale, the stop is set at one location. In my case, in these, it's 12 ticks, 3 points. This is what I was talking about earlier. Once you decide on this stop level or stop distance, and you have your package figured out, then the first scale, the risk neutral scale, is automatic because it's for half of the package. And it's for the same amount of ticks positively as the stop is negatively. And then the runner is the balance of the package. So essentially what happens is when you achieve this first target, the trade is then risk neutral. The worst that you can possibly do is scratch. And you can manage the trade and let the runner go however you want. If it's if you trade a 4 lot, same thing. 4 lots, 12 ticks. Half the package, same stop same take profit as the stop target, and then the runners. And how you determine the stop is really important because you need to take into consideration your risk tolerance, risk management, account preservation, ATR, whatever you do, chicken bones, voodoo, I don't know, however you want to go about doing it for yourself. But you have to be real careful that you've taken into all consideration everything about your account preservation and, burn down rate and all that stuff. That's how you determine that. And then the rest is automatic. It's the size and the stop, and then the stop and half the package and the runner. Simple. And that is a real for me, it's huge psychologically when the minute you get that stop, and of course you never touch your stop and move it away from entry. That is, the cardinal sin. If you're not vetting the trade and you want, for example, let's imagine that I took this IB continuation right here. Here's the scale. No, I'm sorry. Here's the scale. And the price trades up, and then let's say this VPOC migrates up, or it doesn't, and we're not vetting the trade, but we don't want the trade to come back on our lap or back to scratch. We could bring the stop up to entry for an break even. We could take it up and trail it just below these swing lows for trade management. We could follow along with the Yellow Brick Road. That would have worked. And at some point, then for example, if you were thinking like I've been thinking and talking most of the afternoon, that we were going to take this out today, probably, or get damn close to it, especially after we came through here. Remember, this is the all-time high that was put in on the 29th in the RTH session. This is the all-time high on the 31st that was put in the ETH session. These guys never like these guys to have records, and you can listen back in the stream a dozen different places, and I talk about that. So let's pretend you're in this IB continuation trade. You've gotten your scale off. Price is moving your way. You pull your T2 rather than at 52, which would be where your T2 would be normally placed with the bracket. You take it up here to the target, just below, a couple of ticks below this all-time high. Put it up here. And then you manage your risk by bringing your stop up along the bottom of these swing lows so that you don't give away any big amount of profit. And then what would have happened? Oh, boom, you would have gotten right to your target. And what is that? 35 points. What a pleasure. 35 points in 2 hours. Pretty good money. Pretty good money. This is season, using seasonality or whatever. This is one of the worst weeks in the trading year, as far as follow through and low volume and things, because it's it's the middle of heading towards the end of summer and people are on vacation. The Fed's not meeting. They're going to Jackson Hole. Blah blah blah. On and on. So historically, this is not a good week, not a down week, but just a soft week, and with that light volume and not a lot of high time frame around, maybe that's why they felt the need to get up here and do this, or that they felt they could. The power hour. Okay, so we're going to round that final curve, the bottom of the hour here, and head for the cash close. The stream I'll be closing the stream off around 1500 as usual. Every day, 5 days a week. It's come up. The stream starts at 0800 for pre-market and 50 cents says they run for the roses. They're in that all-time high. Sometime between now and the top of the hour. Or they're going to be real clever and wait for a closing swing trade. Okie dokie. Well, I really don't know what the hell is wrong with me. I guess it's fear. That's all it must be. To stand here and identify and anticipate, identify, narrate precisely a setup that I'm focused on for vetting purposes here. Vetting, I guess everybody knows what that means, is that you capture a statistically significant data set of anything, and you determine if it has a positive edge or expectancy or not. In the case of what we do with trading, you identify a setup, you identify, probably more important than the setup itself, you identify the parameters and the trigger that justify or that validate the entry of that trade, and then you capture as many instances of that as you can, depending on, if you have to go back and look at your chart one by one, or if you're a code wizard and you whip out some Python or backtesting software, whatever. Minimum for a statistically significant data set would be at least 50, better 100 or more instances of that exact setup and those exact criteria. Then mathematically, does it have an edge or not? What percentage of the time do I get T1? What percentage of the time do I get to T2, target 2, of 100 trades, 1,000 trades, whatever it is? And if it does have that edge, then you can lean on that, and when it presents itself in the live market, you trade it. Simple. I know that. And I don't eat my own dog food here. I didn't take this trade. This happened a couple of 3 times now in the last week to now. I didn't take this trade, and look at it. It's just this is not FOMO, and this is not rear view mirror trading. This is looking back at the market, recent market conditions, and analyzing what happened and trying to figure out what the hell is wrong with me. But yeah, there you are. That is the big it in the sky, boys and girls. And we have just zoomed around the corner of the final turn. And we will be heading our way to the top of the hour. Market on close orders will be released at 1450. I hope wherever you are, it's been a good trading day and that you've been able to. Something that I have done here has contributed in some positive way to what you're doing. Now I got this all screwed up now, doing all my gymnastics to show this chart. These are the naked volume points of control here. You can see where all of those red lines are. The yellow are the micro composite volume points of control. In other words, they're down below us now, but there was one here which we took out. Now we've got a naked one down here, and a naked one here, and a naked one here. I don't think I mentioned, but this black volume profile line, that's the granddaddy profile that's of the ES continuous contract, obviously, because U is this 90-day period. ES starting October 7th of 2021. That's the volume profile for there. Okay, so we've got this going on. Everybody's, busy smoking crack over here and going up on fumes. I guess, why ever they think they should do that. And here we are. We're going to get that all-time high now. Who was it said that? Who was that masked man? That could have been me. I'm going to win $5 off of one of you guys. absolutely trying to predict or know where the market is going or that you were right about that trade is the worst mindset you can have for yourself in trading. It is, you are here to play, or I don't like the word play. I don't like to use the words play, game, bet, any of that stuff associated with trading, because I am very definitely opposed to thinking of it as a gambling game. But it is a game of listen to me stumble. It is a endeavor of probabilities. You are playing or using, or I don't know, I'll think of the right word one of these days, for probabilities to manifest your edge by the number of instances or occurrences of a particular setup which has a positive edge, and you are doing that to manifest that edge through the law of large numbers to your bank account. That simple. And if it sounds simple without going through all the explanation, which I do a couple of times in the stream, and they are in the footnote or in the timestamp, it's the business model of a casino, of gambling from the point of view of the casino. Be the casino. They do not gamble. They do not. What they do is they predetermine if a particular game that they are going to do or that they're thinking of using on the casino floor has an edge, and they take a statistical, believe me, more than 100, they take thousands of instances of that exact game and those exact criteria to determine if that has an edge or not. And if it does, on the floor of the casino, their object is to play that game as many times as they can in 24 hours. They know that gamblers will win. They know they'll have losing days, sometimes losing weekends. It doesn't bother them a bit, because they know over the long haul, the edge is in their court, and the edge will bring the money to their side of the table. The pit boss doesn't shoot the dealer and run around, change all the rules when somebody wins. And you should not even consider that. You should not even be remotely emotional about it. A losing trade, what you should be doing is making sure that it is within the parameters of your your probabilities on the large statistical study and look back that you've done. Because you're going to have random distributions. That's part of life. That's part of reality. That's part of statistics. That is real. Here comes that overnight high. Watch this. And that's why you want to have as large a data set as you can, so that you can try to get your numbers and your statistics outside of that random distribution. Flip a coin. That's the obvious analogy. Everybody on the planet, I think, knows that a coin flip is 50-50, isn't it? There's only two possibilities. Guess what there is in trading? What is this what are the possibilities of this market to do? Go up or go down? Flip heads or flip tails? That's it. Therefore, statistically, the outcome of the next trade is 50-50 over a large sample size. You flip a coin 10 times, you might get 8 heads. You might get all heads. Who knows? But you do it enough times, you get enough samples or instances or occurrences or whatever word you want to use, and it will come near 50-50. There you go. The law of large numbers. Look it up. It's all just math and statistics. Ed Thorpe was a math teacher, for Christ's sake. He first took the Kelly criterion and the law of large numbers, and went to Las Vegas with some of his students and made so much money they quit landing crumb. And then he started whatever the hell the name of his trading firm was, and did the exact same thing and made billions of dollars. Jim Simmons, mathematician, same story. Paul Tudor Jones, clever guy, not a mathematician necessarily, but a real clever guy. Same story. Tom Sosnoff. Tom the trader, best loser wins for somebody that's pretty popular nowadays. Tom B in the Traders Lab. Rod, Garrett, any of the guys in Static, same exact story. Exactly what same. Everybody's trading the same. Everybody who is successful at trading realizes that's what it is. You're not predicting where it's going to go. You didn't get all excited. You're not a big shot or a genius because you won. That's not how it goes. I mean, these are things, remember, this is my journal, and so I'm talking to myself. And looky here, there's our level. There's a little liquidity there of 237 just ahead of our level. And we've got about 10 and a half minutes to the MOCs. Well, I'll tell you one thing, if they don't get that next tick, I will be a pretty surprised person. They'll get the next tick and then one or two more just so they can have the level, so they can have the record. The statistic, whatever you want to say. Nice to see a bunch of people coming through here. Slap a thumbs up, subscribe, it'd be great. If you want these session prices, happy to share them free, of course. Subscribe and drop something in the chat so that I can know you're around and, hook you up with them. Every day from 8 in the morning until 3 in the afternoon. The curb trade is actually 15 minutes past 3. That's what they used to call the curb trade in the pits. Cash closes at 1500, and people would be scuffling around trying to settle up stuff. The curb trade, jokingly, because they were doing it out on the curb as they were getting in their cars. That's 15 minutes, but I typically cut the stream off. I do not stop my machines, of course, until 1600 when I pull down and restart, or get Bookmap ready to restart, because I want a complete capture of the session from the start of the overnight to the close of the RTH. And I do that every day and have a few years of them. IRT I do not restart, typically, unless it's got maybe some kind of sluggish action, and I think it's got some kind of a memory leak going on or something. It starts at a little before 1700 on Sunday and runs through 1600 on Friday. Actually goes through the weekend into the Saturday, because I'm usually doing something homework-wise. So the trades I'm betting are the IBs, which are obviously there and there. Talk about them in depth in the pre-market and through the day. So, breeze back by. Come hang out. And I guess the most important thing is my ulterior motive here is to establish and maintain a consistently profitable trading business for myself and my family. And I discuss why I stream this stuff. But I'm happy to say that, again, come on. I stream it to YouTube because I'm not a multitasker. I don't multitask well. And for me, I believe journaling is important. So for me to be able to screen snap and type and do all of that nonsense and trade it and be focused in on the market at the same time doesn't work very well for me. And so it was suggested to me by somebody, Tom, I think, narrate the market. You know, he's always talking about narrate the market as you go along. And so I figured out, well, I can use OBS and I can do this, and I don't have to type anything. I can remain completely focused on the market, and all I need to do is talk, which gets what I was thinking into the recording. I stream it to YouTube so that I can review it on any device. It's important that it's transparent and fully, completely, unquestionably accountable. And that's another way to do that, because once it's live streamed up, it's there. I mean, I could take it down, of course, but then that doesn't. I don't know what I'm talking about is uneditable and unfunny business, you know, like a lot of the people do. One of the favorites that I actually used to get annoyed by a guy that did this when I lived in Malaysia, Kuala Lumpur, Malaysia for 11 years. There was a guy who trades over here and streams every day, and he used to stream in the morning about 8. I'd come on like 8:20 or something like that. He's still active. I won't name him, I guess, but he's now a pimp for one of the bigger, he's now, the front man for one of the bigger prop, certainly not TopStep, one of the bigger prop outfits who I don't believe is exactly above board, or doesn't sound like they are to me. But he would continually have a big loser. He was a wild trader didn't use stops and didn't use, wasn't risk management focused, or I didn't really pick up that he had any strategy in mind. And he, would end the stream, was like an hour and a half or 2 hours. He'd end the stream a lot of times down $1,000 or $2,000. And the next morning he'd be, oh yeah, well, I'm up now because I got back on the stream after lunch and I got all that back and then made some more. And I thought, Jesus Christ, man, really? And it's like, fairy tales can come true. It can happen to you. You're young at heart. I don't know. I guess enough people buy it that, hey, I heard he got paid a buttload of money to switch over to be the front guy for one of the main front guys for this outfit. So good for him. He's a youngish guy and married and a little kid, or probably maybe got 2 by now. I don't know. We moved here to the States in August of 21, so that was before there. And I haven't paid any attention since. I used to listen to a recording of his stream when I was working out. I used to climb the stairs in the building we lived in KL. It worked out perfect. I got 4,000, think about how that worked. It was about 4,000 flights of steps in a relatively short period of time. It was great. And I could listen to it on the phone, on YouTube. Well, now we have just migrated the full session volume profile, which you see that now that we've gotten them both together, we're at 10.3. So the minute this one says 10,054, the POC will move there, or vice versa. Not mysterious, it's not magical. You can easily predict when we're going to have a VPOC migration. It's real easy to do. Just look at the numbers in the volume profile, and you can figure it right out. I used to call that out all the time, but I haven't, since I've been focused on the IB and whatnot, I haven't been doing that. That's something I need to remember. I need to focus on calling those migrations out, because I think people might, it might be meaningful to some folks. I don't know. Okay, 2 minutes, a minute and a half till the world famous market on close orders. Keep going over here. It makes me crazy. Now, this is Financial Juice, where I get more up to the minute, this kind of stuff. What is this? What the hell does that mean? Could expand cut of China sales to other companies. I guess the last time I heard, they had decided that a week or so ago, it was a big military danger and security danger to sell these top chips, NVIDIA and what's his name, to China. Then earlier this week, I guess Monday, or maybe it was Friday. Well, they can sell the chips to them, but we're gonna charge them. They're gonna pay the government, the U.S. government, 15% of what they sell them for. There's our market on close orders, getting ready to pop right here. Now they got something else going on, I guess. I don't know. Wow. Anyway, the market on close orders will pop up there in Financial Juice, and this is free, Financial Juice. So anybody's welcome to help themselves to using that for a news source. And the one I rely on more for numbers and earnings reports and stuff is investing.com. So there's the 50 number. That's what we got on the market on close orders. Pretty soon those orders actually will show up over in Financial Juice here. I suppose if you pay for the live one, it's immediate, but I don't see the need to do that. I don't see the need to do that. Come on, you've only got one tick. What's the matter with you? They're gonna get it now. Watch them. Well, I wanted to watch that. The market on close orders are out, and they're pretty substantial. Wow, very substantial. You'll be amazed here in a minute. But I'm having fun watching this. If these girls don't get up here and get this all-time high out, I'm gonna, be thoroughly disappointed with all of them. There we go. They got it now. They got the all-time high, baby. Funny, huh? Funny. Not by much, but they got it. And we are not in the closing swing trade yet either, but I knew that was going to happen. So these are the market on close imbalance, and this is how you read this. This is the S&P 500 has a sell side 2,094 million sell side imbalance. NASDAQ 100, 1,565 million contracts. These are. Dow 30 is 518 million sell side, and the Mag 7 is 799 million sell side. So all of them are sell side imbalance. And imagine 2,094 million S&P 500 contracts. Imagine how much money. Just whip that out at, $12.50 a tick and see how much, see what that adds up to. Pretty amazing. Pretty amazing. I don't know what that was all about. Oh, I'm on the wrong page here. Okay. I'm terrible about this. Sorry about that. I gotta up my game with this presenting thing. Okay, let's get back to the issue at hand now. Here we're going to really get excited now. Nope, they just took it out by a tick and they're still fussing around with it over here. Certainly not anything to trade. I don't recommend. But again, if you've got statistics that say you do this profitably, there you go. That's all you need to do. That's all you need. One of the things that I do that has some merit in a certain way. These people that all the YouTube, take this one trade at blah 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 9:15 every day or something like that, and retire. Okay, that's typically bullshit and bus tickets actually. But on the other hand, if you focus on one trade, like I'm doing to vet the IB's trades, and you take that one trade successfully every day, or you take it exactly, specifically the same way every day, and it has an edge, then it will be, be consistently profitable. You don't have to be trading all over the board and trading, clicking here and shorting there and pulling the top here. And I was looking for this big, I was looking for this low volume node over here, and I saw them sweep out over this, and the stops were taken here, and here's the iceberg down here. And yeah, if you're real, if you're on your A game and really have all that figured out, but a lot of the real professional, successful traders don't trade that way. By them, one guy at a time. I mean, obviously, the citadels and the people that are running algos, they've got 1,500 programmers, pretty easy for them to be all over the board. Okay, well, we're heading into the close now with a little less than 4 minutes. Disappointing day on my part. I'll have my homework to do to review that, why I didn't take that. Thanks for coming by. Remember, 8 o'clock in the morning, the pre-market and the stream starts with the setup and the explanation and the numbers and the pre-market and the analysis of the overnight and whatever else. And then we're off to the races at 8:30. 2 minutes. They're trying like hell, aren't they? They want to be sure everybody knows they got that level in. And they did by a tick. A tick is a tick, right? When it's a tick and it takes your stop, it's damn sure is real. That's for sure. We're into the minute. There comes the market on close stuff jamming in there. And I don't really understand how this. I'll be honest with you. I don't understand. I've got to Google and figure out exactly the significance of the market on close orders. I would have thought if you have a couple of billion sell side market on close imbalance that we would get selling. You know what I mean? If you see where I'm going there. Usually by this time of the day, I've been standing here for 7 hours now. Well, 6 hours and 59 minutes and 45 seconds to be exact. Boom. There we go. I think. Yeah, okay. I think that's the clappy thing. I always forget there's pads and stuff on this mixer that I can do silly stuff with. I forget about it. So there we go, and a kind of a late minute VPOC migration up here, right at the close. That's always fun. Now, here's something to think about. Typically, when we close on the high and the big run up and VPOC migration and all that kind of thing, typically that price action would continue into the open of the ETH session. You know, that's kind of what used to be the case anyway. That we used to always think that way. So that'll be interesting to see. I've kind of thought about that and tried it, you know, paper traded it or whatever before lately, and it doesn't work out that way. Usually it's some pullback or something else, but something to think about, something to watch for. That's interesting. Here we are at the close. Up here, we put in a new all-time high just by a whisker. The developing value area high is right at the top, meaning that there's no excess up there in the auction. There's the developing, there's the VPOC, the VPOC. And so it would be interesting to see what happens on the RTH Open. Remember that there's still another hour for them to fluff around with this thing. Another 15 minutes here, and then something may occur that I'm not aware of. See how flat this profile is on the top? There's no excess up there. The TPOs are stacked up. That's a weak high. This is just barely okay because there's two TPOs at the bottom. But you see how they typically come to a point. In other words, the auction came to a conclusion up there. They ran out of, up here they ran out of sellers, and down here they ran out of buyers. Well, look at this over here. Here's the bottom. There's yesterday. Look at there. What's that say? To me, it says that we're going to have a continuation in the overnight, but I'm not to a point that I'm going to try to trade it here, because that is no trade that I have vetted. I don't have any statistics for that kind of a play. And this is kind of a limp deal they got on over here, isn't it? That's kind of a bunch of nothing. Let's get that. Oh, okay. And they could, you know, now the closing swing or something could sort of kick in, and they might just blast off. Who knows? They might blast up here to these hundreds. Never know. I don't ever know anyway. All right, so boys and girls, thanks for stopping by. I hope you come in tomorrow. I hope you get something out of it that's of value to you. That would be really great. Let me know. I'm going to shut her down here and be back on with bells on at 8 o'clock in the morning. Have a great night. Take this period between the sessions and get outside, get some exercise, get some fresh air, do something good for your body, rest your eyes, whatever it is. And above all, you know, have a good one and stay safe. Thanks for stopping by, and hit the thumbs up on the way out the door, and the subscription would be fantastic. Be a big help. Thanks a lot. Take care.